We're going to need to get some intro music. I'm going to have to figure that out. All right, everybody. Happy Monday. I'm up in Boston, so it's not the usual setup. There's like this really weird, like, white chair. I had to remove it. It was ridiculous. I felt like a little kid sitting on like a king's throne. But we're here now, and I will address the elephant in the room. And I'll just wait for some folks to join because I know everybody wants to ask about a very big news event that happened in the recent past. So I definitely will address that. I have a few different ways that we could address it. If you have any questions, feel free to pop it in the chat. I'll wait another little bit for folks to join. I got more water. So yeah, if you're already here, just fire away in the chat. There's an obvious one that I'm definitely going to address right up front. But any questions that you have, just fire away into the chat, and I'll be more than happy to address it. But while we're at it, I'm going to go headfirst into it and address the elephant in the room, which is... Dun, 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 dun. Let me share my screen. All right. So here we go. So this is a Barron's article. All right. So we got a Barron's article right here. And it says United Health got a boost from Berkshire buying. 2 reasons to wait to follow. So I'm just going to read this. You have to have the Wall Street Journal to get access to this. So I'm just going to read it for us right here. It's the worst performing stock in the Dow Jones Industrial Average so far this year, but it got a major boost last week from billionaire investor Warren Buffett. That doesn't mean everyone else should buy. And I'm going to get into a few key pieces to that end. So moving on. So Berkshire bought 5 million shares. It sparked a 14% rally. It's been going up pretty much every day since. And it says investors eager to follow in the Sage of Omaha's footsteps need to be wary of a few risks, according to Bank of America analyst Kevin Fishbeck. So major changes to the Medicare Advantage program could carve more deeply into the group's profits over the coming years. So let's pause right there. The Medicare Advantage program. Does anybody know what the Medicare Advantage program involves? No. Does anybody know the pricing? No. So it's like you have to be a real expert to truly understand this particular area. This particular area is not the same, let me repeat, not the same as life insurance. It's a very, very different business. So life insurance is very straightforward. You have an actuarial table, you know when people are going to die. So it's pretty simple. You know the risks. They're very simple, very straightforward. Healthcare, totally different. What happens if you get hit by a bus? It's not something that we can really quantify the risk. So Berkshire Hathaway investing is a positive sign, but it only really reaffirms the widely held view by many investors that United Health's earnings are depressed. I don't deny that. If you could take a 5-year view, you will likely do well. So the question is, less is their upside, but when will it be realized? So this is something that I've mentioned in previous live streams as it pertains to United Healthcare. I'm not like anti-United Healthcare or something like that. It's just, are you willing to wait the amount of time that it's going to inevitably take for United Healthcare to actually have this rise? And for the vast majority of the people on this channel that love the videos I do on the Mag 7 and, Amazon and SoundHound and all this stuff, like for you to turn around and then all of a sudden be like, bro, I'm all in on United Healthcare is just like bizarre. Like it's a completely different type of company than the average company that we cover on the channel. But I digress. Let me continue. So 2 events over the coming 6 months will help answer that. Both are linked to an overhaul of the Medicare Advantage plans by the Centers for Medicare and Medicaid Services. So again, to that end, we've got a whole new administration, whole new rules, laws, etc. Okay. So Medicare Advantage allows private insurers like United Health to offer managed care for elderly Americans as an alternative to the standard government Medicare offering. Government bases payouts on a fixed rate per enrolled beneficiary each month. The CMS Division of Department of Health and Human Services, for those of you who are joining, we're going through the United Health debacle. We'll update its rating system, blah, 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 blah. Last year, just 42% of the nearly 550 Medicare Advantage plans assessed earned the 4-star threshold, down from 68%. Let's see, what other juicy bits? Okay, here we go, kids. On a 3 to 5% target margin business, Stars performance can make or break Medicare Advantage profitability. Interesting. If Stars drop meaningfully in 2027, the return to normalized margins would be pushed to 2028 at the earliest, likely leaving the stock in limbo for another year. So for the average person out there that's like a cat with a laser pointer when it comes to investing, if like a stock doesn't go up in like a month or two, bro, you're talking about 3 years here, okay? C'est la vie, good luck. And normally we would have confidence in United Health maintaining Stars, but the widespread nature of the issues it's facing, that it hasn't been managed well for years, leaving the door open for a negative surprise. Blah, blah, blah. All right, let's see what else. New coding adjustment, blah, blah, blah. Nothing matters if United Health isn't hitting its earnings guidance, adding that it needs to do that the right way. Now, if you remember last week when I had the analyst, the video from, he was from Raymond James, and John Ransom, all right, very memorable name. And he was like, stay away, stay away, stay away, stay away. And I don't think this news would change his mind at all whatsoever. So this harkens back to what he had said. Full year earnings target of $16 a share, a level that fell shy of Wall Street forecast, allows room to exceed expectations. Consistent beats and raises will go far toward instilling confidence that management is on top of issues. Okay, so again, I just walked us through this article right here. So United Health got a boost, blah, blah, blah. Now, a few other things, okay? So looking right here, at an old article, hold on, I got to reshare. Sharing is caring, yes, yes. All right. So, Warren Buffett, okay? Warren Buffett has a little different perspective than the rest of us, okay? We're hunting for elephant-sized acquisition. So, Warren Buffett is literally hunting for elephants, not literally hunting for elephants. So, what he's doing is he is focused on these massive acquisitions, okay? Massive acquisitions. And these are the acquisitions that you and I are not typically interested in. So he's looking for acquisitions. Yes, we'll get into Intel too, another bleep storm. So if we look at the types of acquisitions that Warren Buffett looks to make, he's looking for very large companies, okay? So they're looking for, they say that they're hunting for elephants. They're looking for, you know, multi-billion, like hundreds of billions of dollars in market cap type acquisitions. Okay. So at the end of the day, if you're trying to compare, you know, what would be a good investment for you or I versus like what is considered a good investment for Warren Buffett probably wouldn't invest in nearly anything that, you know, we look at on the channel for the most part. But one final thing, and then I'll put it to bed unless you guys want to go like really bananas here. Hold on. Wait for it. Okay. So this is another key piece to the puzzle. So Constellation Brands is a company that we covered on the channel. I'm personally invested in Constellation Brands. So Constellation Brands, we're talking about Corona, Modelo, etc. And they also have a wine portfolio as well. But here's the key. I can tell you for a statistical fact that Warren Buffett made that investment decision because he was 100% at the helm. I cannot necessarily say that about this acquisition because, dun, 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 May 5th, all right, May 5th was the annual meeting for Berkshire Hathaway where Warren Buffett gave the reins official, okay, time that Greg Abel is taking over is right here, January 1st, 2026. But for all intents and purposes, from May 5th, 2025 until January 1st, 2026, this dude's running the show, okay? Now, if you sit here and you think to yourself that Warren Buffett invested in United Healthcare and then decided to just like hand the reins over to Greg Abel and like figure it out, bro, you're smoking some really good stuff. I'd love to have some of that. But the reality is, this was Greg Abel's decision. Okay, this was not Warren Buffett's decision. And if you look at the typical Warren Buffett investment, ironically, Constellation Brands would be a good example. Let's take a look at the Constellation Brands stock. So, finance.yahoo.com. So, Warren Buffett, when he first started investing in Constellation Brands, ticker STZ, wait for it, he's probably invested in, I've estimated like the low to mid 200s, okay? So I'm just going to do the last year, and then I'll share the screen there. All right, so stop share here. And start share here. Constellation Brands, okay? So Berkshire started investing in Constellation Brands in this area, okay? So I'd say like latter half of 2024, all right? I can 100% say like Buffett was making that decision, buying, etc. Okay, now it's down. Okay, I think my average price is like 168, so right around this current level. And yes, it's going to take time for it to go up, but like this is a classic case. Buffett typically doesn't wait for a bottom. Okay, he's usually early to the party, but he's willing to hold on long enough for the thesis to bear out. So I would say with the United Health, that was a Greg Abel decision. But again, one final thing, and then I'll address Cooper's comment here. So one final thing that I'm going to address is I'm going to put a side-by-side here. Okay, so I put together a little Excel analysis here, and I'm going to put it up on the screen. And we have two companies side by side, Company A and Company B. So let's see which one you would prefer to invest in. Here we go. All right. So we've got Company A. All right, Company A. So revenue CAGR 5 years historically, 11.3%. The forward CAGR, 6.4%. Gross margin in 2020, 26.1, 2025, 20.8. So going down significantly. EBITDA margin, 9.5 to 7.9, going down significantly. Debt to EBITDA leverage, going up significantly. EBITDA over interest coverage ratio, we want this to be higher, going down significantly. Return on assets is like another decent proxy for return on capital, also going down. Then we have Company B, 5-year past revenue growth, 15.8%. This is a CAGR, 10.2% 5-year forward rate. Gross margin, 39.6 in 2020, 49.6 today. EBITDA margin, 12.5% in 2020, 20% today. Debt to EBITDA, 1.9x 2020, 1.1 today. So delevering. EBITDA over interest, 33 to 67. Return on assets, 5.2 to 7.7. So if we look at those factors and those factors alone, if I asked anybody in the chat, if I asked 100 people on the street, and I'll zoom in a little bit. Okay. It would be basically unfathomable that anybody, if given those two options, okay, would pick Company A over Company B. All right. I think that's safe to say. So the big reveal here, friends, is Company A is United Healthcare. I know, you're shocked. Company B is Amazon. All right. So if given the option and you had one of two choices, would you rather buy Company A or Company B? The answer would be Company B. It's not even a question. Okay. Now, I don't deny that if you buy United Healthcare today, should it be higher 5 years from now? I would say that makes logical sense. Yes. But it's probably going to be dead money for 2 to 3 years based on the article I just went over from Barron's on the Medicare Advantage program changes. So that is my 2 cents with that. And then I will go to the chat. So I did want to address that. All right. So here we go. Intel. Yeah, so Intel's had a lot of stuff going on with it recently. Um, and I think that's kind of like an understatement for sure. So when you look at Intel, there's a lot of like news that doesn't necessarily have anything to do with the actual valuation. You know, Trump said that Lip Bhutan was connected with China and like he needs to go. Oddly enough, the stock went up as a result of that. The guy's barely been in charge of Intel. So I don't think like, you know, where Intel stock is, that was more so the old regime, Pat Gelsinger and stuff like that. So the fact that, you know, the stock went up as a result of that was just bizarre. Then Trump meets with Lip Bhutan and he's like, it's actually a pretty good guy. I like him. Stock goes up more. Okay. Now, the thing that's interesting about Intel, and I only saw it in passing because I was, I'm up in Boston running a credit training program up here for a different bank. I saw some very interesting things related to the CHIPS Act and all that stuff. So let's search it in real time. Intel latest news. Because I'm like passing by a TV when I'm going to get a cup of coffee. And this is where like I was like very kind of confused and it sounded quite intriguing. So let's share the screen. So yeah, so let me click on, boom. Yeah, so I was talking about the US government taking an equity stake from their CHIPS Act grant. So this is the potential saving grace. The one thing that was holding back Intel is the bleeping foundry business, which is an absolute dumpster fire disaster. It's a horrible business. Everything good that Intel is doing is being destroyed by the foundry business. The problem is the terms from the CHIPS Act preclude Intel from getting rid of the foundry business. So this latest news, which is, again, still not 100% clear, could very well change things. So let's check out the Intel latest news. We'll address it, and then I'll go through the other points in the chat. All right, so the Trump administration is reportedly considering approximately a 10% stake in Intel by converting some of the grants already awarded under the CHIPS Act into equity. Now, this could be a blessing in disguise because I think this is one of the things that is holding back Intel. Okay, news of a potential government stake initially caused a rally in Intel shares last week, but the stock fell today, August 18th, which is today. As investors reassess the implications of the potential conversion of grants into equity. So remember, the CHIPS Act, several $billion, they used some of it. I think the total is 8.5 and they've used, they got 6.8 remaining, something like that. So the issue is you're converting debt into equity. So that means the people that are still holding on to this dumpster fire known as Intel, those individuals are going to get diluted, okay, to the tune of billions of dollars if the government does convert its stake. Now, the only positive is if the government converts its stake, that should free up Intel from selling the foundry. The problem with the foundry, though, is it loses billions of dollars. I don't know of any entity that likes making positive returns that would be willing to purchase a business that is just hemorrhaging cash. So turnaround efforts, obviously a disaster. Lip Bhutan's only been here for frickin' 5 months, not even total. So you can't judge his efficacy just yet. Intense competition, net loss, declining revenue, total frickin' disaster. Significant cost-cutting measures. But again, my issue with the cost-cutting measures is you're cutting costs, and that's all good and well, but you're cutting people that helped you generate the revenues that you currently have, which are still insufficient. So it's like, what is the ultimate solution here? All right. So product announcement, AI focus, some of that stuff is actually halfway decent. Manufacturing and future outlook. Again, the 18A, like this is, supposed to be the greatest thing since sliced bread. But at the end of the day, it's like, okay, this is, still, it's 18A, 17A, 16A, 15A. It's like always, something new coming out. And again, it's still, microchips for PCs. All right. That's kind of still the bread and butter. All right. So let me stop sharing and then address some other ones. Okay. Did you check PANW earnings? I have not. So can't really comment on that just yet. But if you'd like, I could go see what's going on with the company over on Cap IQ, PANW. Da-na-na. Palo Alto. So hold on, I'll pull up the CIQ estimates, Cap IQ estimates. Let me share my screen. All right, Palo Alto Networks. All right, so here it is. Last close 176. It looks like it's kind of right in the middle. Definitely undervalued. Let's see what the actual amount of undervalue. Let's go from the median. So 217. So 217 divided by 176. Yeah, it's 23% undervalued based on the median. Again, I haven't, dug into anything here, but it's definitely closer to the midpoint there. So it's kind of right in between, but the overall rating is an outperform rating. Again, I haven't looked at the earnings, so I can't really opine much, but I figured at the very least, more than happy to share it with you. So Ian, I agree. Here, let me put it up on the screen. I'm still getting used to this Riverside. So I agree with your point about Berkshire and United Healthcare, but does it have any bearing on the investment recommendation? Seems like even if it was born behind the wheel, the fundamentals would still be the same. Amen and hallelujah. All right. So again, let's go back to that point. Okay. So regardless of who's making the investment, it all boils down to the fundamentals, friends. Okay. So again, let's share it. So I did the side by side here. Okay. So again, full disclosure, everybody. The company on the left, company A, is United Healthcare. Company B is Amazon. There's literally no metric that you look at where you would prefer investing in United Health over Amazon. And the punchline is, guys, you, me, we're not Berkshire Hathaway. We can invest in whatever we want. Obviously, Amazon would be a way better place to put your money. Just because something is quote unquote undervalued, you have to say to yourself, do I understand the business? Okay. Is this a business I understand I could wrap my hands around? And at the end of the day, health insurance, not life insurance, health insurance is just a totally different ball of wax. It's so different. And I don't think most of us really appreciate that. Life insurance is very straightforward. You pay the premium. When you die, people get paid out. Health insurance is totally different. There's, a minimum deductible amount. There's co-pays. You have to hit the deductible. And then what if you are sick, but there's certain things that are covered, certain things that aren't covered. And it's just what the heck? It's a low margin, awful business. It's just not a good business. Okay. So again, the company on the left is United Healthcare. Company on the right is Amazon. On literally every metric, any sort of fundamental at all whatsoever, you would always choose company B. And the punchline is you don't have to invest in United Healthcare. It's a declining business across the board. You could do your own research and just see for yourself. It's a very low margin, highly competitive business. Now, I don't know to what extent you guys have particular healthcare. I have Blue Cross Blue Shield. But I've had United Healthcare in the past. If I wanted to leave United Healthcare, I could. I could go to Aetna. I could go wherever else. So it's there's no stickiness to the customer at the end of the day. So again, health insurance, not a really interesting play. All right, so let's get back to the chat here. So Eminem, hello. Let's see. Okay. Interesting one right here. So we have, I always prefer Intel CPUs over AMD, but I'm in the minority, I think. I'm not going to speak for everybody here, but I know for a fact some people would say you are. I hear fellow gamers. Let me pull it back up. I don't know why it went away so quickly. Oh, here we go. Dude. The chat is blowing up tonight. This is wonderful. Fellow gamers are always talking about how great it is because they're cheaper. AMD is because they're cheaper. Okay. Yeah, Berkshire buying into United Healthcare. Greg Abel took over. This is not Warren Buffett. Okay. Greg Abel from May 5th until he officially takes over. That's a Greg Abel decision. And I can't vouch for Greg Abel. I mean, I'm assuming he's smart enough guy because obviously Warren Buffett picked him, but I could say like this is not Warren Buffett. All right, so hold on. Okay, so Min, after the Intel story, please discuss Berkshire. Understand that Berkshire invested in United Health, but what's your thought on Berkshire itself? Berkshire itself, very big fan. We've touched upon Berkshire in the past. And I think the key with Berkshire is if you really want to get a good understanding or appreciation of Berkshire, what you would do is you would literally value it on a sum of parts basis. They have all the different investments. You would take each of those investments, and technically what you would have to do is see undervalued, overvalued, so you'd have to measure the intrinsic value. But if Berkshire Hathaway owns a stake in Coca-Cola, and let's say you think that Coca-Cola is worth $100 a share, okay, and it's currently trading at $50 a share. If you bought Berkshire, you're buying into that discount. So technically you would have to do an intrinsic value, basically the analysis that we do every week on the YouTube channel for all of those individual stakes, and then map all of those out and add the cash. I would say based on that, without going too deep into it, Berkshire is undervalued. It's also sitting on a massive stockpile of cash. Now, that being said, does that mean you should invest in it? Well, that depends. I definitely think it's undervalued. We're going to see how, Greg Abel works in terms of his investing track record. Also, truth be told, he's not the only person that is running things, kind of like Warren Buffett had Charlie Munger. There's a lot of other people that are behind the scenes. There's a lot more checks and balances now than there was in the past. There was just Warren Buffett and Charlie Munger, and that was kind of it. He kind of has like a team of individuals that are running the portfolio. So it's definitely a kind of different scenario. But do I think Berkshire's undervalued? Yes. Do I own Berkshire? Yes. But honestly, I've wanted to do a video on Berkshire on YouTube, but it has like the worst search traffic ever. And because we have like 9.1K followers, like we need to do stuff that's going to get clicks. So eventually when we have like 100,000 followers, then I'll do Berkshire Hathaway and, Howard Hughes Holdings and all the stuff that I think is really interesting. Okay, so in my opinion, Berkshire will not outperform the market. Buffett is out soon, and all they have are low growth and or legacy companies. So I just want to double click on that and show that because it is an interesting point. So look, if you are a value investor and you buy $1 for 50 cents, you buy stuff that's undervalued, over time, that value will bear out. I think to the point that you were making, which is a valid point, it's like there's the law of large numbers and the size. So at this point, Berkshire Hathaway is such a large entity from a size perspective. It'll be very difficult to generate the same returns going forward that it has in the past, which takes us all the way back to the original point of the United Healthcare investment. And when you're making these investments in these super large companies, there's just less opportunity. Warren Buffett even says, I envy all of you, all of us here. Warren Buffett envies us. Why? He envies us because we can invest in SoundHound or, Joby or any of these companies because we don't have a mandate that requires us to invest hundreds of billions of dollars. Now, I know what most of you are saying. Oh, dude, I wish I had hundreds of billions of dollars. From an investing perspective, I don't think so because it's very, very difficult to allocate that much capital. You literally move the market, good or bad. So just be mindful of that because that's one of the things that is very challenging. I think looking at Warren Buffett and Berkshire Hathaway relative to, a smaller entity like HHH, Howard Hughes Holdings, I would say like that would be a better opportunity. If you wanted to find the next Berkshire, I think you'd be better off finding like that as an opportunity. And by the way, I touched upon that previously. Bill Ackman is trying to create the next Berkshire Hathaway with Howard Hughes Holdings, HHH. He invested at $100 per share a few months ago when the stock was trading at 65. So think about that. If he's buying at a 50% discount, that means he thinks it's worth 150, which means if you buy it at, 65, 70 bucks, you are buying, a dollar for 50 cents. So, and also he's generated incredible returns if you look at Pershing Square Capital. So something to definitely check out. All right, let me keep moving on here. Healthcare companies are evil. Ooh. I think just in general, it's just a schlocky business, denying, conditions and stuff like that. It's like, I paid the insurance and you're not going to treat me. Like, you hear those stories. It's absolutely horrible. Okay, here we go. I'm learning how to get these up. Any thoughts on the latest PPI data coming in much hotter than expected? In my mind, it makes a lot of sense that producers are seeing inflation first, and then CPI will follow in the coming months. So if you actually look at the kind of deeper arc of this, the general consensus is like a third, meaning that the companies will eat a third, the suppliers will eat a third, and then a third will get eaten up in prices. But again, I would say it's very difficult to fully articulate it. Now, I know people say runaway inflation. It's already been articulated. I think it was there was an independent. I'll pull it up. I forget. There's so many different, nonpartisan entities. I got to pull it up here. But they said the overall increase in prices over the long term will be 2%. Impact of 2% long term. I just forget who the entity was that said it. Looks like the Tax Foundation. Yeah, it looks like the Tax Foundation said 2%. But, when you look at it over the long term, it washes out. So I think that's kind of the way that you have to look at it, guys. Like, people kind of extrapolate stuff way, way too far in the future. At the end of the day, the market is dynamic and it's adaptive. So it's not the case that like the market's not going to be able to adapt. Short term, yeah, it's probably going to be some negative impact. But over the long term, it should be a net benefit. And then if you really want to focus long term, the tariffs will become, pointless because when the revenue is being brought in, it'll achieve like normalism, or normality and equilibrium. The funny thing is we pay tariffs everywhere. Nobody says anything about that. I saw Kevin O'Leary was on the other day, love him or not, and he said like there's a VAT tax, value added tax all over Europe, and we all pay it. Like when you go to Europe, you pay the VAT tax. We don't have that here, and we can't pass a VAT tax here. So the closest equivalent would be the tariffs. All right, so let's see. Intel. There's like chats, iterative chats going on here. Okay. So here we go. What are your top 3 long-term holdings from Naroon? So I'm going to actually pull up my portfolio. I disclose my portfolio on my school community just so you guys are aware. It's not something that I share on YouTube. I just share the weights here and there. But I'm going to pull it up in real time. And because you said top 3 long-term holdings, I want to basically give you the ones based on the portfolio that I have. And yes, I have Berkshire Hathaway and I have Costco. I have some like stereotypical like Buffett-esque holdings. But if you were saying, hey Ken, I don't own any of the stocks that you own, which are the top 3 that you're like super positive on? So Microsoft, total no-brainer. When you look at AI and like the AI war, if you want to call it a war, I don't see Microsoft losing. I just look at everything that they're doing The data centers they're building, the fact that they changed their business. It was ironic. I was talking about it today. The analyst that I'm training, I mentioned to you guys earlier, I'm up in Penn. And I was talking about the shift that Microsoft made in its business when they started charging a subscription model for Microsoft Office. What a genius shift. All right. That's how the most valuable software companies are valued, right? They get valued on a recurring revenue basis. So when they did that, that completely changed the game. So Microsoft would definitely be one of the long-term holdings. And I can only pick 3. Ooh, that's tough. I'm going to pick the 3 with the most potential over the long term as well. So Microsoft, definitely there. CrowdStrike, I haven't touched upon for a while, since the fall, but we came on the anniversary a few weeks ago of the massive drop. That was the whole Microsoft outage that had occurred, and it got cut by 50%. I did valuation. You could go look at the old video. I had a value of 290 on it, and I started building a position at 240, and then I bought all the way down to 220. So that doubled in less than a year. It went above 500, but it's pulled back. That one actually, I have to update the video. Again, it has no search traffic. The algorithm hates it. That one's an interesting one. So I'm just going to put that off on the shelf. But cybersecurity is something that's definitely going to be necessary for the long term. This one's going to be controversial, so everybody just be careful here. Tesla, which I'm in the process of updating, by the way. If you believe the thesis of humanoid robots, full self-driving cars, robotaxis, and all of the other things, that could be the sleeping giant. Now, take all the stuff, the political, blah, 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 all right? Everybody forgets about this stuff like that, okay? I could care less about that stuff. I want to make money, and I want you to make money. So if they, at Tesla, hit all those different things, humanoid robots are happening, like it or not. No question. I think all of us within the next 5 to 10 years, we will each have a humanoid robot in our house. I know it sounds crazy right now, but doing things like washing the dishes, doing your laundry, stuff like that. Now, obviously, starting out, it'll probably be pretty expensive. It'll probably be $100,000. It won't be accessible to the average person, but eventually, you'll be getting a humanoid robot on Amazon, at Walmart, etc. When you think about the potential, right now, I looked the other day, there's 8.142 billion people on planet Earth. You cut that in half, you cut that in half. You're talking about there's 2 billion people that are a potential target market for it. I can't think of anything that's currently being sold where there's 2 billion of a potential market. And I'm just being super conservative there. So I think that as a long-term play, again, there's going to be a lot of volatility in the interim because it's kind of transitioning. I liken it to when Amazon went from being a bookseller to, the powerhouse that it is today. That shift, you had to be a long-term believer. And at the end of the day, I've mentioned this before. There's a great book called 100 Baggers by Chris Mayer. Definitely check that book out. Maybe I'll profile it on the live stream. But he talks about what makes a 100 bagger. And just so you understand, what is a 100 bagger? If you invest $10,000, it turns into $1 million. And the key is time. You need time. So I don't necessarily think Tesla's undervalued. I think it's probably going to come up as a hold or maybe overvalued. But that particular stock, Dan Ives has a value of 500 on it. So it's pretty funny. The people that I'm training, the credit analysts, they're at the Red Sox game. And it looks like one of them popped into the live stream. They're saying, "Let's go Sox." I couldn't go to the game because I'm a man of the people doing the live stream here. So hold on. The scrolling here. The chat's insane. So yeah, shout out to Jackson, who I'm training this week. Man, the chat is on fire. The chat is on fire. All right, I want to get... okay, so I only went through 2... so I said Microsoft and Tesla. Celsius has been ripping. My God, it's 6120. It's like, you guys are the ones that tell me about Celsius. People are like, dude, did you see Celsius? And I'm like, oh yeah. And then I look, I'm like, oh my gosh, I didn't even see that. Who? Okay, so I said Microsoft, Tesla. Ooh, one other one long term. Amazon or Google? I'm going Amazon. Yeah, so I'll go Microsoft, Amazon, Tesla. Those would be my three for Naroon. So hello, Bull Chat. Intel's going up like crazy. So somebody said there's Intel has news out. Hang on, I'm gonna profile this on the stream. Intel has news out. SoftBank investment. That'd be interesting. So after hours, let's see. I'm gonna check it after hours. Yeah, it's up 5.4%. It's up to 24.94. Remember though, like, it doesn't change the fact that the foundry is a disaster and a dumpster fire. Unless SoftBank decides they're gonna like eat the foundry, it still doesn't change the thesis. Now that could also be related to the conversion of the CHIPS Act grant into equity, but again, that's diluting shareholders. Call me crazy. SoftBank is probably going to dilute shareholders as well. So, you know, I don't know why the stock would go up by so much for seemingly no logical reason. All right, so okay, we got favorite Mag 7 for me, Google and Amazon. Those are very good picks. So David, I need to like literally do a video of Howard Hughes Holdings. So just to explain it without going into the earnings specifically. So it's basically a real estate development company. They own a ton of land, a lot in Texas. So they're doing a lot of redevelopment of real estate, but that's only like one piece of the puzzle. Really what Bill Ackman's trying to do is create an acquisition vehicle similar to Berkshire Hathaway. So right now, if you look at the company and you're like, where's the value? The value is not in the company the way it's currently constituted. It would be in the future of being the next Berkshire Hathaway. So that's the thing to be mindful of with Howard Hughes Holdings. I don't think just looking at the earnings is really going to tell much. If you want to learn more about Howard Hughes Holdings, what I would advise is Bill Ackman did a whole presentation on the Pershing Square site. I mean, it's a monster. I think it's like 90 minutes long, where he literally had his fund managers at Pershing Square talk about what the vision is for Howard Hughes Holdings. You have to watch that. Okay, you have to watch that. So that is different though, since it hurts domestic companies the same as foreign. Okay, so let's touch on the whole tariff insanity here. Okay, so VAT stands for value-added tax, and more or less people say a tariff's a tax. But again, like, let's really like play this out. Okay, right now, the United States, good, bad, or indifferent, pays tariffs all across the world. Okay, but everybody can sell their stuff here without a tariff. Obviously, that's changed. So like, why is that okay, regardless of where you are from on planet Earth? For those of you who don't know, tariffs came about like globally after World War II. So the United States won World War II. I think we're aware of that, right? Back-to-back World War champs, not bad. And in response to that, to help these other countries actually come back, okay, from an economic perspective, it was, you could trade freely with us, we'll pay tariffs, okay? So like many things in life, it didn't just kind of go away, and it just stayed. And in some cases, it got worse over time. Go try to buy a Ford, okay, a Ford F-150 in Germany. You're not going to be able to, okay? It's literally more expensive than a BMW. Now, people here are like, what are you talking about? People in America are like, what, a Ford F-150 is more than, yes, more than a Mercedes. Why? Because of tariffs. We can't sell our products there, which is madness, okay? So when you think about it, it's not a level playing field, all right? So why is it that we have to eat this? It doesn't make any logical sense. Now, here's the other counterpoint. You want to do business with us? You're going to eat it. Deal with it. And that's kind of the whole push and pull. The reality is this: we're the largest market on planet Earth. Like, you want to sell here, guess what? You're going to have to play ball. So rather than kind of like, I think we're like splitting hairs with the tariffs here, it has to play out. Like, it doesn't make logical sense, like, runaway inflation. Like, no, like, look at the yield curve. The yield curve, if there were runaway inflation, you'd see, rates on the long end of the curve would be like 10%. They're not. So it's something that has to, it has to play out over time, but I wouldn't get too bent out of shape with it, because you have to look at the companies that are most exposed to it. And those are the ones that you have to kind of really like kind of dig into. Like, you're exposed to steel or aluminum. It's like, okay, is there a way that you could reorient the supply chain? Remember COVID? Like, companies adapted, and now they're better off for it. So I think, like, if you can think about COVID as a scenario, I think that would be a good example. Okay, I'll address this because this is funny. Eminem. I don't have faith in Microsoft. People hate what Microsoft does to Windows. The only reason people still use Windows is because there's no alternative besides Linux and Apple. Correct. I agree with you. They're a monopoly. I hate the Microsoft updates. Right now on my screen it says activate Windows, go to setting to activate Windows. I don't even know what that means. Like, I have Windows. Like, I don't know what that even means. It restarts my computer in the middle of the night when I tell it not to. I delay it a million times. It actually caused the CrowdStrike outage, which was technically a good thing because it ended up making me 100% return on the stock. So again, it's basically a monopoly for all intents and purposes. I don't know any other like legal monopolies that we can actually purchase outside of Microsoft. So, that and their R&D and their work towards AI, it's like, it's kind of a no brainer. Oh, okay, cool. Eminem's from the Netherlands. All right, this is perfect. Maybe you could opine on some of our tariff conversation here. All right. Okay, this is an interesting one. Okay, so hold on. The scroll bar here is driving me crazy. I'm going to have to like call this company and say, what's up with the scroll bar? It's like super thin. And every time I go to it, like the chat has like this seizure. It's so freaking annoying. All right, let's see here. Okay, so let's just dig in here. All right, robotaxi will have very slim margins, very competitive as the current Uber, Lyft landscape today. This is good. I want to talk about this. Humanoid will take several years. Totally agree. I don't see the increase in their business except for rate cuts. So let's take a look at it, right? Robotaxis come out, all right, unless Uber and Lyft get some sort of like special agreement there, their businesses are definitely going to suffer significantly. All right, like, so if you have the option of a Waymo, an Uber, or a Lyft, I don't know about you, like, I don't mind talking to the drivers, but sometimes it gets really annoying in terms of like where they're turning and stuff like that. Or, like, I'm like, hey, like, I'm in a rush, So I think there's a certain aspect of that where it's like, from a cost perspective, you remove the human element from the driving component. That should drive down costs for the robotaxi. Again, I agree with you. It all remains to be seen. Humanoid robots are a few years away. And rate cuts, I don't think that really has like much of an impact on, the Tesla business. What was interesting is, I don't know if you guys saw the article on the carbon credits. I thought that was kind of interesting. Carbon credits going away, Tesla. Okay, so now the big beautiful bill is getting rid of the carbon credits for Tesla. But the weird thing is, and I'm trying to find the article, I saw it today on my phone. Elon Musk said a year ago, he's like, good, get rid of the carbon credits because it'll make it more competitive for us, meaning that we'll be able to outcompete other companies. Now, yes, it is a revenue stream. It's going to be phasing out, but they're selling these credits to other companies, all right? So Tesla is effectively ahead of the game from, an ESG perspective, and all of these other companies are behind the 8 ball. So Tesla's response: Tesla has actively encouraged customers to purchase vehicles before the deadline. So that's the EV tax credit. This is the carbon credit. This, I'm talking about what they sell to other countries. All All right, so let's see. Tesla raked in $11 billion by selling regulatory credits, propped up its earnings. Hold on. I want to find Elon Musk quote. Elon Musk quote. Because he actually came out and he was like, I don't care. Get rid of it. It's going to be helpful for us. Where the heck is this? See, for all of you who are like, I want to invest in Google, this is now pissing me off because it's like, it's not finding what I want it to find. Musk has often expressed a belief in phasing out fossil fuels and the importance of a carbon tax. The information suggests a shift in his public comments regarding the continuation of subsidies due to current policy changes. And it's still not finding the son of a gun. But it was from 2024. I do distinctly remember that. And he posted a tweet and he said, let's get rid of the carbon credits. And he said, over the long term, it'll actually help us rather than hurt us. So for what that's worth, but I can't find it because Google AI overview is garbage. All right, so hold on. I want to get, all right, so this is good. This is good. So the chat is blowing up, but I'm trying to track it as best I can, friends. So this is like a total party. We got people from all over the planet. This is great. All right, so let me scroll down here. We got into that. We got into that. Triple H earnings. We got into that. Yeah, robotaxi. What are your thoughts on AMD over Nvidia long term? We actually have a few people on here that I know for a fact are pretty astute on this one. So remember, Nvidia is a designer of chips more so than a fabricator of chips. Also, AMD is more focused on CPUs, not GPUs. So for computers, and Nvidia is more graphical processing. Nvidia is going to be more relevant for like data centers. AMD not so much. So long term, I would say if I could only pick one, I would probably go Nvidia. The challenge with Nvidia is the law of large numbers. It's like so light years ahead of where it would necessarily be on a normal growth trajectory. But also both of them have just ripped recently. But if I'm just looking at business models and that's it, I would prefer Nvidia over AMD for the simple fact that Nvidia is a designer of chips. It's almost like the equivalent of being an architect. So if you were an architect, right, I'd rather be an architect than a real estate developer. You're basically like paying me to do the designs, all right? So if I'm getting paid to do designs, that's way better than having to actually build the thing that's in the design. So I would way rather be in that situation. All right, so going backwards here, this scrolling thing is driving me bananas. Okay, so then next, Geo. So Giovanni, Amazon soon to be the market leader in online grocery. So this is pretty interesting because this is not something that you think of when you think of Amazon. Just like when I talked about it in the YouTube video, Amazon is number 3 in advertising in the world, which is just like, you definitely don't think of Amazon. I do sometimes when I'm watching like Amazon Prime and all these stupid advertisements come up. But outside of that, don't really think about it from an advertising perspective. All right, so here we go. What is your biggest contrarian thesis besides Tesla, where market majority may not see what you're seeing? I would say Rivian. Rivian is one that a lot of people are not kind of clicking with because they're like, EV, I don't like EV. And it's like, okay, but they're focused on a niche. So they're focused on trucks, okay? Specifically, people that want to go off-road, want to go camping. And when you think about it, their actual customers that have bought from them say 98% say they would buy another one. Okay, that's like unheard of. What typically happens? Most of us, we buy a car and we're like, this thing's a piece of garbage. Like, I never want to buy this again. But imagine, like, I can't even think of anything that's remotely close to that. I know people that buy all different kinds of cars, Mercedes, Corvettes. Nobody says, like, I would buy one again. Everybody's like, well, you know, this or that. There's always like something to complain about. But I would say Rivian would be that kind of longer term. Remember, Amazon owns 18.1% of the company. They lost $16.8 billion with a B, okay, that they had to write off from. Remember at IPO, it was at like 120. It was like, goes down to $10. All right. Amazon hasn't sold one share. So people are worried about spending like a few grand on the shares. Amazon has an exposure of tens of billions of dollars. And then Volkswagen decides they're going to throw tens of billions of dollars into this company. So that would be my other kind of like contrarian thesis. It's definitely going to take some time to play out. I think 2025 is kind of dead money until the R2 comes out in 2026. And again, it's basically like a venture type investment, but they have a long runway. That's the key. You want to make sure that you have a long runway when you have companies like that. They just turned gross profit, positive gross profit. So those are the types of things that you want to look at. But I would say that's probably the most contrarian thesis. Okay, so let's get to our Netherlands friend. I'm thinking of buying some Puma because it's so low, and I feel like it's only a matter of time before it goes up again like it did in 2021. So I don't know if I could do a poll. I'm still getting used to this software, but I have to believe I could do a poll. I'm going to do a poll if possible and just ask how many people have bought Pumas in the last 5 years. So let me see how I do a poll with Riverside. Hold on. Poll on Riverside. Now, maybe you're like, I don't care because I'm in the Netherlands if I'm M&M. But if I could do a poll, I'll at least give you the perspective of the U.S. Folks. Can't poll. Well, there goes that idea. But I would say, like, the last time I bought Pumas was pre-COVID. Okay, and maybe I was partly responsible for that pop in 2021. One of the things that you have to be cognizant of, I have very good buddy who is an analyst in consumer products companies. So he covers Under Armour, he covers Nike. Some of you know him. And sometimes like brands get fad-y. And I think that was what kind of happened for Nike. So Nike would do these like rollouts of these super exclusive shoes, and they were very hard to get. And then they did too many. They did too much volume of the shoes. So like people would like go into the store and they'd see like the latest like exclusive release, and there would still be some on the shelves. So what ended up happening was people were kind of like, what's going on here? It doesn't feel exclusive. So I just know personally, I have a pair of Pumas from, a few years ago. There's nothing like specific wow about them. Now, I don't know how much the shoes have changed, that they feel like walking on clouds and, you feel like a bigger, better person wearing Pumas, or if it's just like, it's so undervalued, it's stupid. I personally haven't looked at it recently, but you always have to be careful with retail stocks. All right, so hold on, Naroon. There are claims of Google's 12% search growth numbers being technically overinflated due to most of those queries being generated indirectly through AI searches like ChatGPT. So my counterpoint to that would be like, where's the advertising revenue coming from? So if they said they were making a bajillion% return, like, where's the revenue? So I personally don't care as much about the search volume as I care about the dollars, like in pockets. So I don't think that honestly matters as much. Yes, so Eminem said, I don't want an American car. You're probably along with a lot of people on here in America as well. Okay, so we got massive levies in India too, to the tune of 100%, crazy EV market, and Tesla is trying to carve some market share. So the crazy thing is, if you actually look, Netherlands being one of the countries, and a bunch of like the Scandinavian countries, like they didn't skip a beat. They're buying a ton of Teslas there, and there's still significant growth there. But again, I think if you just look at Tesla as an EV company, it's a little bit myopic. Okay, so here we go. So we've got our friend from the Netherlands here, everybody. So people in Europe don't want a lot of things from America, like food. Too many toxic additives are still allowed, but luckily RFK Jr. is trying to get rid of them. So I think when you think about like American products, it's like when Starbucks, and I know Cooper will probably have a time on this one. Starbucks decided to go to China, okay, and like force a tea drinking country to drink coffee. I thought that was like suicide to begin with. I didn't understand it from the get-go. I was like, this is a dumb idea. But they did it anyways, okay? Sometimes in those cases, people want the product because they want to be associated with like, oh, this is American, like eating McDonald's, okay? But when it comes to like just overtly buying American products versus local products, yeah, I don't see that as like a thing per se. Definitely on the food, maybe the fast food if you want to get like fat or maybe you want to gain weight. All right, so working the scroll bar here. Bear with me, folks. Okay. All right, here we go. So Lucas, hi Ken, what do you think about the luxury center like LVMH, BC, RMS? Huge fan of the luxury center because those are price inelastic, meaning the people that buy luxury goods, there's a recession, they're still buying them. They don't care because typically the people buying them are wealthy. So there's a ton of brand value and equity in those types of businesses. That being said, I haven't looked, I looked at LVMH previously. I haven't looked at it in some time. Interestingly enough, the book that I mentioned, 100 Baggers by Chris Mayer, he actually specifically references like the Louis Vuittons and these like family conglomerate type businesses actually have a very high likelihood of being able to be 100 bagger. And when I say 100 bagger, it's just a term. It means if you put in 10,000, it will grow to $1 million. That's the whole idea. But I'm looking right here. LVMH has hit the skids a little bit. So yeah, I haven't looked at it in some time. Last time I looked at it was in like the 130s, but it's 111.45. It's definitely down. But I mean, they have such a wide portfolio. It says right here, they're in discussions to sell Marc Jacobs. Me personally, I'm not like big into like the, the fashion area. Like, I mean, like when someone has like a really, really nice watch, I know like, what a Rolex is or like a Patek Philippe. But like if you were wearing like a $500,000 watch, I would have no idea. Like you'd have to tell me like, bro, this is worth $500,000. At that point, why don't you just walk around with a glass suitcase filled with $500,000? I personally don't understand the logic. Like I would never like in my right mind, like walk out wearing something that was like, 50 people's kind of like annual, income. It just seems like a little scary to do that. But to each his own. But yeah, I'm a fan of luxury goods companies. Like Ferrari's another one that's been a good like value stock for a while. Ooh, good question. Just found your channel. Love it. Thank you. Appreciate you. What are your thoughts on Apollo? Big fan. They're crushing it this year and the stock is going nowhere. Thanks. So, Apollo. Let's pull it up on the screen. Let's go to Cap IQ, friends. Dun, 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 dun. All right, so APOL. Yeah, so Cap IQ, I'm not like flexing or anything. It costs like $25,000, $30,000 a year. So I prefer looking at this. It's very dense in terms of the information it gives us. And again, I'm not flexing. It's just like it's a really, really phenomenal tool. I prefer it over like, Yahoo Finance. So let's see here. It closed at 139. The low is, let's call it 118, high 178. Only 16 analysts that follow it. To be honest, I haven't looked in depth at the business. You could see it doesn't have many analysts covering it, but this is what you want to kind of look at. Look at the key stats. Let's see here. All right. So I think this kind of speaks to your point. If you look at the top, the growth year over year, so I would say logically, the reason why the stock hasn't popped so much, the top line is down in 24 and the last 12 months year to date. But it does have a mid-teens top line moving forward. So that's actually obviously a tremendous positive there. Now, looking at some other things, I want to look at some ratios. Return on assets, not so hot. Return on equity's gotten better, but I'd have to dig into these numbers. Like, I'm not one of these people that's just like good, bad. It's like I have to understand like what the hell happened in 2022 for it to be minus 25.6%. That's just like bizarre. That doesn't make any sense. And then like gross margin 100% in 2020, and then 41%. First off, it doesn't make mathematical sense that you could have 100% gross margin, but 41% in 2025 LTM. So anytime, one of the caveats here, guys, anytime you're looking at a company like Apollo, who else? Blackstone, these are asset managers. It's a totally different business model. So it might like look cheap, but they're going to trade more like financial services companies. So they typically trade more like banks, which is literally a completely different analysis. So I would always be a little cautious when looking at those, and you definitely have to dig into the numbers pretty substantially. But as I saw there, like the top line revenue growth was negative the last full year and year to date. So that's the type of stuff where I'd be like, I've got to dig into that. So, all right, so this is interesting. My friend from the Netherlands. All right, so a couple things here. We're highlighting you. You're our international friend today. People in Europe got their panties in a bunch about tariffs, but I don't mind them. I think it's going to benefit America. I think things will balance out. Amen and hallelujah. Things always do balance out. And then I got to give you the shout out with this next one. Did you know the stock market was invented in the Netherlands? The tulip bulb craze, for those that you don't know, that's one of the bubbles that happened in the past. So yes, markets actually did start. He is correct, or I'm assuming you're a guy because like 101% of people on this channel are male, but if you're not, I apologize. How do you view Uber? All right, so excellent question there, David. I'm kind of torn. I'm torn on both Uber and Lyft, and I'll explain why. I'm torn on Uber and Lyft because if self-driving cars, robotaxis are a thing, I ask myself the question, would I ever take an Uber to the airport if I had a self-driving car? Maybe the parking, the this, the that, okay. But I think that there's going to be a significant negative impact. Now, you could say, well, Ken, Uber's doing other things. You could rent boats and helicopters and all of these stuff. Fair. Okay. That's a diversification strategy. But I think the traditional, like, hey, we're like a taxi, but better. That's the part where it kind of gets a little murky to me when we have a near future of full self-driving cars and robo-taxis. That's where I've got to like kind of step back and say, I can't really go too nuts on Uber or Lyft as a result of that. That would be kind of my my 2 cents there. All right, sweet. So hold on. All right. Okay, so Cooper, I told you we've got some smart engineer folks here. So I got to highlight these comments. All right, so after Uber, we got Cooper said, hey Ken, AMD is also a designer. They also use TSMC for their fabrication. So a lot of companies use TSMC. Ironically, Intel does as well, yet Intel decided we're going to beat TSMC with the foundry, which is a dumb idea. Again, though, I think computer microprocessors, like I think about how often I buy a computer and then henceforth need, a new processor versus the obvious demand with AI data centers, et cetera. That's kind of one of the things that I look at, like if I'm comparing, an Nvidia to an AMD. But yes, I am aware that they also use TSMC. All right. What do you think of BN? I believe Pershing Square flagship has a giant investment in Brookfield. So yeah, there's a bunch of different Brookfields that are out there. They do a lot of real estate development. They do a lot of real estate management. Let me look at BN specifically, because there's a few different Brookfields out there, and not all of which I'm familiar with. So for example, like I just typed in Brookfield. There's Brookfield Corporation, which is who Tyler mentioned, BN, but there's Brookfield Renewable Partners, Infrastructure Partners, Infrastructure Corporation, Real Assets Income Fund. So they're basically an asset manager pretty focused on real estate. Now, again, looking at, and I'll pull it up on CapIQ as well. Anytime you look at any type of asset manager, they're going to trade differently. Also, I noticed this is on the Toronto Stock Exchange. But again, you have to look at the numbers and say to yourself, like, does this seem like the type of thing that I would want to invest in? So if I'm looking here, okay, I see return on assets, 1.8% to 2.6% over the last 5 years. Gross margin has expanded. That's a positive. It's more than doubled. It's gone from 15.2% over here to 31.8% over here. That's phenomenal. That's probably a lot of the reason why the stock has been ripping. EBITDA margin expansion as well. But we have to kind of step back and recognize what this business actually is / does. And that's why I want to go down to check the leverage. Okay, so this is something that you have to focus on. You see total debt to EBITDA right here? That is like insane, okay? Like most people would shiver if they saw like 5 or 6 times. This is a highly, highly, highly levered company. And it makes sense being an asset manager. But remember, levered returns are a double-edged sword. So this is why, for example, Bear Stearns and Lehman Brothers are no longer with us. Sorry for everybody, Bear Stearns and Lehman Brothers. But the reason why they're no longer with us is they had 30-to-1 leverage. What that means is that a 1% change means 30% to the actual equity. And that's what happened, all right? So you always have to be very careful with levered equities. And this would be an example of a levered equity. So anytime you have levered equities, that's a double-edged sword. So it will cut both ways. So that would be my caution with BN or any of these levered equities. So you just got to be very, very, very careful with that. There we go. Hey, Professor. Currently getting my MBA at Rutgers. So I know a guy at Rutgers who teaches financial modeling on Saturdays. I would highly recommend his class. Okay. I want to buy an electric car. Okay. Comments are all over the place. All right. So we got Clutch. I like that name. Buffett buys companies that will be good companies 20 years from now. Go Lip Go. Okay. Now I remember you. So yes, Buffett, his whole investment philosophy, and I would encourage you guys, go look back at his shareholder letters. They're publicly available. There was somebody, I forget what school it was. There's a school up in Canada, and one of the professors got all of the old partnership letters and PDF'd them. I downloaded them a while ago, but they're really good to read because you understand his philosophy. So I'll just give a few, Buffettisms real quick. So one is, when Buffett invests, he says, if I left planet Earth and I returned in 20 years, I know that, people will still be drinking Coca-Cola. They'll still be chewing Wrigley's gum. They'll still be eating Snickers bars. They'll still be, eating Dairy Queen Blizzards. They'll still be wearing Hanes underwear, etc. So that is the concept of a competitive moat. If you think about like medieval times, like the wider the moat, the harder it is to siege the castle, versus if you could just like step right over, there's not much of a moat. There's a really good book. I want to pull it up in real time because it was that good. The guy who ran Morningstar wrote it. It's one of the little book series, little book about moats. Competitive advantage, Morningstar. It's Pat something, I remember. Is it the little book that builds wealth? Is this it? No, it's not Heather Brilliant. I don't know who you are. Wait. I just saw it. Here it is. Yes, Pat Dorsey. All right, I'm pulling it up for everybody. Bear with me. So this is a book that is literally written about how to find companies that have moats. So right here, Pat Dorsey, I believe he ran Morningstar Research, if I remember correctly. So the little book that builds wealth, the knockout formula for finding great investments. So the whole focus here is finding companies that have that moat. Okay. So you see, there it is. So let me scroll a little bit. Economic moats, competitive advantages. So look right here, folks. The four most common sources: intangible assets, cost advantages, customer switching costs, and network economics. So if it's going to cost you a lot of money to switch, that's a massive competitive advantage. All right. That's just one example. But if you want to learn more so about the methodology that Buffett employs when trying to find companies, he's also looking for companies that are in like the top 3 in their respective industry. So Buffett ended up buying Forest River, which was the number 2 maker of RVs. This was probably 15 years ago now. So when I was working at the hedge fund on the buy side, the first thing that I said to myself was, who's number 1? So I found Thor Industries. You could go look it up. THO, the number 1 maker of RVs. Now, his whole thesis was, at the end of the day, baby boomers, 300,000 are retiring every month. Even if 1% decide they're going to buy an RV as their, vehicle of choice to travel in their golden years, that's 3,000 RVs a month. And demographically speaking, there's a lot of baby boomers over a very long period of time. Okay. So if you think with that logic, it's like, that makes sense. And using that logic, I ended up, buying a stake in Thor, but that was a cautionary tale as well. So when I bought into Thor Industries, I ended up doing this like insane analysis, and some of you took my financial modeling accelerator course, and I shared the model with you, which is an absolute beast. I came up with like 25 years of historical multiples, and I basically said like, this is the lowest price it could ever go, $9.98. So what was crazy was it went like 10, $9.99, $9.98, and it went like $9.97. I'm like, oh, maybe it's going to go down further. And then, dude, it like shot up like a freaking rocket ship. And it ended up going up to like $60 a share. It's a cyclical business though. So I ended up coming back to it a few years later. I saw it at $19.21, or I'll never forget. I didn't even analyze it. I just bought it. And then I ended up buying more, and it ended up going up to like $120 a share. So that's something that was a cautionary tale. But that book is really good if you want to get a better sense. Because you hear, I get it, like you hear all these stupid platitudes, a competitive moat, and you're like, oh yeah, a moat. And it's like, well, how do I quantify that? What the hell does that mean? But that book actually gets deep into it. That's cool. The first stock exchange was in Amsterdam, and it's such a beautiful building. I would like to visit, and for other reasons than just to see the stock exchange. But yes, I've heard it's a beautiful place. Um, dude, I get a kick out of you, my friend. Donald Trump says things that John Wayne would say, and he's serious. Yes. Um, I forget what show I was watching, and that's what it was. There's like a new show where like they keep people away for like 3 months or 6 months. They live together and they can't watch the news. And then like the way that they actually like win is they're told like what has happened like in the actual news, and is it true or is it false? And it's like the most impossible thing. It's the most impossible thing. Like, think about it. If you weren't around for 3 months and you're like, Donald Trump met with Vladimir Putin in Alaska and flew like planes over, has had B-2 bombers and all this stuff, you'd be like, no way, that didn't happen. And it's like, yeah, it did. Intel probably should have got with ADI analog devices when they had an opportunity. So crazy story. I'm going to find this because this one, every time I read it, I'm like, you've got to be kidding me. All right. For those of you who don't know, like just be careful. You might like break something. Hold on. Wait for it. This will blow your mind. Okay. You're not even going to believe it. I'm going to show it to you. All right. Enough talk. Talk is cheap. So Intel had the opportunity to buy Nvidia in 2005 for $20 billion and decided against it. Die, Intel, die. So Paul Oltolini pushed for the acquisition, recognizing Nvidia's potential in graphics chips and their possible future role in data centers. Well, Paul, we don't do that. That would be innovative. Sit down and shut up. Intel board rejected the idea, citing concerns about integrating the company. Hold on, folks. Wait for it. And its high price tag. Okay. NVIDIA has become a dominant force, $3 trillion. All right. So, true story, kids. True story. Yes. So, real smart move there, huh? So let's see how that would have worked out. I didn't even look at what the current market cap is today for NVIDIA, but let's wait for it. 4.439 trillion with a T. All right, so let's see. 4.439, 123, 123. Yeah. Good God, you've got to be kidding me. What a bunch of dummies. Divided by 20. 123, 123. Good God. Paul Otolini's like sitting somewhere, like probably kicking himself. But, he was the one that came up with the idea. Let's see. My name's Manau. Okay, Manau, like almost like Macau. Cool. Got it, dude. Thoughts on DUOL? Put that on the screen. Boom, Giovanni. Not familiar, to be quite honest with you. DUOL. Oh, Duolingo. Yeah. So here's the crazy thing. I wish they were here. One of my MBA students did a case competition on Duolingo, and it was actually during the year, and he did it in like April. And he's like, the stock is a hold. And then it just ripped. Went to 530 and then came down. So let's step back. Duolingo, for those of you who are not aware, language learning, okay? Now, me personally, when you think about it, right, language learning, when do you go to learn a language? Now, maybe some of you are like, I'm learning languages all the time in my free time. I don't even invest in stocks. I came here randomly. Okay. But typically it's like you want to impress a member of like the opposite sex. So it's like, oh yeah, I speak Portuguese too. It's like, oh wow, cool. Or it would be a case like you're traveling somewhere, but the punchline is it's typically like a very limited engagement. I don't know of many people that are trying like consciously to become polyglots. So I just don't see like what the potential is for a Duolingo long term. Now the problem is they're like, oh yeah, well we're using AI. Like AI has gone a little bit, kind of crazy at this point. So it's like just because something is AI, like AI cookies doesn't make sense. I don't understand AI cookies. Just because you put AI to it doesn't really mean all that much in some instances. So just be cognizant of that. But Duolingo, I mean, are they worth what's the freaking multiple? PE multiple of 151, and that's after the stock has come down, nearly cut in half. I think that is probably a better short than a long. Yes, but now you have colonized the chat. Your countrymen would be proud. This is good. This is good. Health insurance is like navigating the Egyptian Book of the Dead. Amen. When you watch the replay, you'll see I covered it in the beginning. It's like, why do you want to mess with this? It's like, if you told me like, hey Ken, I've got a great business. It's selling. It's down 50%. I'm like, oh, what's the business? And you're like, typewriters. It's like, okay, I'm gonna pass. Hard pass. Like, but you don't understand. You could type on it. It's like, all right, that's cool. All you. Yes. So David said Uber is Bill Ackman's largest position. So again, he sees kind of that network type effect that I was talking about earlier. It's not just the people who are driving other people around. He's kind of going with the model like they're going to be the proliferator of robotaxis because they already have the network. He's a big fan of the actual technology itself. So his argument, that would be against kind of the Tesla robotaxi is like Tesla doesn't have an existing, application network of people. The data that Uber has collected is obviously pretty vast. So like you still have to build that out, but it's kind of like which came first, the chicken or the egg, which is more important. That's kind of the bigger issue. So let me go backwards. This chat's on fire. And yes, Manaw has colonized the chat, which is totally fine. All right, so oh, quantum computing. Yeah, that one's a crazy one. Let's touch upon that. All right, we got a lot of stuff in here. Whoa. Manaw, we got to help you out here, bro. I'm completely new to stocks. I'm just starting to learn about it. Stumbled upon your channel because of your video about Intel. I hope and pray to God Almighty that you didn't invest in Intel. Don't be a contrarian now. But at the end of the day, there's a lot to learn with investing, but don't overthink it. I would actually advise people check out John Bogle's book about, ETFs and dollar cost averaging in ETFs. I really, truly would advise everybody, don't buy individual stocks until you max out your retirement. I'm not BSing when I say that, for real. So someone new to investing, like Manaw, I would say follow that, invest in the market first rather than individual stocks. I definitely stand by that 100%. But what I'm going to do, and obviously the live stream will be part of it, is teach more about kind of how do you know if something is a good investment? I'm in the process of working on a checklist for you guys so that I could give you guys a checklist so you could see okay, it doesn't check these boxes, dumb. So United Healthcare, let's go back to the videotape, that dumpster fire. All right. I might have to just do a video on it just to crap all over it like Intel. But let's pull up the window. Some of you might have missed this earlier. Sorry about that. So the company on the left right here, this is United Healthcare. So for all the people that are I want to invest in United Healthcare more. Dude, the 5-year historical revenue growth, 11.3%. The forward growth rate, 6.4. Gross margin, tanking. EBITDA margin tanking, leverage increasing, coverage decreasing, returns decreasing. Now, alternatively, you could put your hard-earned money, into this. What's this? This is Amazon, okay? It's growing low double digits moving forward. It's supposed to have more than $1 trillion in revenues in 5 years. That's completely bonkers redonkulous, okay? Gross margin up 10%. Are you freaking kidding me? EBITDA margin through the roof. Debt declining, coverage increasing. So it's like you can invest in either one. Why would you invest in this? It just doesn't make logical sense to me. It makes no sense to me. It's like this thing is going down in a blaze of glory. It's just like, it's the Intel logic. Like, which is a better investment, Nvidia or Intel? Now, don't overpay for Nvidia. I totally agree with that. But Intel's not becoming the next Nvidia, okay? Not happening, not happening, not happening, okay? Now, if they dump the foundry and then all of a sudden they actually start, you know, taking advantage of some of the things that they are doing that are well, then yes, it is entirely possible. All right, so let me go back. Yeah, Intel missed a lot of opportunities with Apple as well. That is also true now. To be fair, Intel, all of us had the chance to invest in Nvidia. Okay, so here's what I would say to that. Like, unless you worked for the company, like impossible. Wasn't even on the radar. This would also be something that's very important. Everybody's looking for the next Nvidia, but they're not investing in the current Amazon. This one's bizarre to me. So like, again, I'm not bringing it up again. I think I've belabored the point. The goal isn't to find the next. It would be nice, but it's a fool's errand, okay? There's over 10,000 companies out there. How could you possibly identify that one? Think about electric vehicles, right? Yes, it's a definite demographic trend. But again, I used this example, I believe last week. When cars came out 100 years ago, there were 2,000 car companies, all right? Now there's like 50. And I'm talking about across the board. Tires, parts, like everything, every aspect of a car, in addition to selling the whole car, okay? So like, you know, they always say like the people who are first are the ones with arrows in their back. It's like the first explorers as an example. Like you're going to lose a lot of money if your investment strategy is to find the next Nvidia. Like it's very, 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 very difficult. I would say impossible. This is great. We could have all bought Nvidia in 2005, except for Manau. But that's okay. Goo, Nvidia. Yeah. Okay. Buy what he says. He's a smart baby. Okay. So the chat is blowing up. All right. Let me scroll. Oh, this is a good one. Oh, how is Rutgers Honors College? It's very good. I was actually at a presentation the other night. Like the average SAT score. So I could speak to Rutgers Business School. So that's what it was about. Rutgers Business School is 1420. And then there were like 28,279 applicants and we can only accept 1,100. So I was like blown away by that. Curran, do you ever buy lotto tickets? I do not. So don't judge me, but I do not. It's just like, if you look at the statistics, it's not even worth the paper that it's written on. Okay, here's a good one. Let's get into it, David. I still doubt the comparative advantage of Tesla on humanoid robots. I think I have to do more research on it. I would say yes, you do. Because what people cite is like the MIT research lab, like Boston Robotics. Oh, did you see what they did? And the legs moved? Okay. Elon Musk has humanoid robots literally working right now in his gigafactories. They're building cars, okay? So if you said who could get to 1,000 produced humanoid robots faster? Tesla? Boston Robotics? Not even a question. Tesla, all right? It's like, who could run faster? Usain Bolt? Random person you see on the street. I'm going with Usain Bolt. Okay. So the scale is all that matters. Even if you said to me, Boston Robotics has a superior robot, it doesn't matter. They're never going to make it to the market. All right. So really great quote, Larry Ellison, Oracle. He said, good marketing and an average product beats average marketing and a good product every time. So the most important thing is to get it in people's hands. Okay. So once people have it and they're trying it, if you're like, oh, well, the Boston Robotics robot is so much better than this crappy Tesla humanoid robot, nobody's going to care because everybody's going to have a Tesla humanoid robot. That's the difference. They're scalable. That's the main difference. Yeah, so all kidding aside, people will still be buying toothpaste 100 years from now. and it won't be AI toothpaste. But that would be an argument for Procter and Gamble or Colgate Palmolive, both of whom Buffett has invested in the past. Now, again, they're not going to be like sexy. You're not going to be like, guess what I just invested in? But you'll probably make a pretty good amount of money on it. That's the whole thing. All right, so hold on. This scrolling thing is driving me bananas. This is like my biggest complaint about this platform. Okay. Invest in toilet paper. Yes. All right, hold on. Hey, Billy. What's up, man? Look at that. Billy Benson. All right. He was in last week's training program. Legend. A legend. All right. Shout out. Hello, Professor Freeman. Hello. I still have only a couple of weeks until we're back at Rutgers. Okay, hold on. This is a good one. All right. So it sucks that I did not invest in Apple back in 2010. It did not take a rocket scientist to know that Apple would still be around for decades to come. I'm going to literally invert that, okay? So Charlie Munger, God rest his soul, famous for saying, invert the problem. And this is something like, I'm really being dead serious, guys, okay? Apple, no-brainer in 2010. Okay, I'll give you that. Fair. What's that same no-brainer today? That's the question that you have to ask, okay? If you can answer that question, the Apple in 2010, and think about what is Apple in 2010 today, I can give you a few, okay? Amazon, Google, Microsoft's a little ahead of its skis, but they're there. So don't overthink this. Like trying to find Nvidia in 2005 and 2025, that's a different story. That is a very difficult proposition there. So I'm not going to put that on anybody here. But just be mindful, okay? Like if Apple in 2010 made like stupid sense, like duh, everybody should know that. What is that equivalent today? If you can answer that, then you know what to invest in, okay? You don't even need to like have me tell you that. All right, so scrolling. Yeah, so we're getting into some Elon stuff. He's scrapping his dojo because NVIDIA works better. Wouldn't surprise me if he buys Grok, separate company, GPUs to do inference alongside NVIDIA training. Yeah, I think one of the challenges here is to not get distracted. Stick to what you know. And I think that's a bigger danger, is to get distracted on things that just don't make sense. So it's like, if Elon and Tesla are going to do humanoid robots, rock the robots, bro. But don't get like off the beaten path with too many things. That would definitely be a concern. Oh, dude. You are a very, very, very happy person. Bought a ton of Amazon when you retired through your rollover. One of my former students works in strategic finance at Amazon and like gets shares. Saved $1 billion last year by determining that like it's cheaper to have a drone send you stuff versus a human versus the U.S. Postal Service. Like wild, simple stuff like that. It's crazy. Going through the chat. Let's see. The chat is going bananas. So, other questions that you guys have, latest, greatest, etc. Valuation, finance, markets. But one of the things that I would encourage all of you, and just like kind of in general, is one of the challenges that we have today is like the noise factor, not from an audio perspective, but there's so many distractions. It's very, very difficult to like weed through the noise. Think about Intel. Okay, let's touch upon that for a second. Trump says Lip-Bhutan is like Chinese connected. He's got to go. Okay. Stock goes up, which I don't understand that. It's like, aren't we giving this guy a shot because Pat Gelsinger isn't there? Okay. So now he goes to the White House and it's like, good guy. Love his story. So it's like, oh, okay. And then now, today, it's like, wait a sec. The U.S. is thinking of doing a debt for equity swap, which, by the way, is going to dilute shareholders. Nobody wants to hear that. They're thinking of doing a debt for equity swap of the CHIPS Act grant. That would actually be huge because I think that's the one thing that is preventing Intel from divesting of the foundry, okay, which is a total albatross for them. So all these things happen, but here's the thing. Did any one of those things that I just mentioned have any impact on valuation? Zero. So Trump saying something about someone, no relevance. The debt for equity swap, if anything, that would actually reduce the value because it's going to dilute existing shareholders. And unless, here's what I will tell you. If Intel comes out tomorrow and says, we have a buyer for the foundry business, I think the stock could go mid-30s like that, okay? That's how horrible the foundry business is. It is a disaster. It's bleeding, okay? All right, hold on. All right, hey, Ken, I got a company I think you should look into, Ibarra Corp out of Japan. Let me look it up in real time. Why not? Let's go nuts. Ibarra. We're going international. EBCOY, EBCOF. So it's trading OTC. Ooh, $11.15. I like that. It has ripped recently. There's no recent stories. Let's see if we can pull it up on Cap IQ. All right. Where'd Cap IQ go? Oh, here it is. No. All right, Ibarra. All right, let's see, Ibarra. It is an ADR, American Depository Receipt. It's not showing up in my initial search. Comes up on the Taiwan Stock Exchange. We'll click on that. All right, let me show this. I'll share my screen. Chat's going bananas. All good. Here we go. Ibarra. Okay, increasing ROA, ROE, that's all good. Margins expanding. Let's see what they do. Good question. Tear sheet. They manufacture and sell industrial machinery. There we go. Pumps, fans, chillers, cooling towers, heating and cooling equipment, compressors, turbines. This actually makes me think of Ingersoll Rand Industrial, as well as Atlas Copco. But moving on, waste treatment plants, wood biomass power plants, chemical recycling plants. Yes, this is an industrial company. Again, I'm just going to look at the key stats. I'm just curious where they stand because I've done like in-depth analysis on Ingersoll Rand, IR Industrial. So here we go. Yeah, so Ingersoll Rand, I mean, their freaking margins are redonkulous. Like me personally, if I had the choice, I'd rather invest in, a domestic industrials company. I mean, they buy a bunch of international companies. I've also looked at Atlas Copco as well in the past. But that's kind of my like quick and dirty there. I know the yen is brutal. Yeah, I mean, it's like if I have the choice, like unless the company like they don't exist anywhere else, it'd be very difficult for me to like want to go elsewhere. It's kind of like, what's the one everybody always asks me about? ASML. Everybody's like, oh, you got a ASML. It's like, okay, I'm going to have to invest, outside of the United States and then get this currency exposure. Is there anything like even remotely equivalent here? And the answer is yes. But it's okay that they make steam turbines. Again, it's industrials. Okay, so any interest in emerging markets? I would say in general, I would take a fund approach, like a diversification approach to emerging markets. Like Vanguard has like total world stock market. What the hell is that? Vanguard. Yeah, VT, Vanguard Total World Stock Index Fund. That's going to give you everything. But if I did Vanguard Emerging, I've invested VWO, Emerging Stock Index Fund, and the thing is freaking ripped. There's a lot of potential upside, but also a lot of risk. Oh, but now he's going to go crazy because ASML in the Netherlands. So Netherlands control the tech world because we have ASML. So here we go. We have ASML, the company that makes the machines that makes the computer chips. So it's like we don't even realize this. Like we're just waiting for the Netherlands to bring the 1600s back here. I love it. We'll be wearing clogs before you know it. Who knows? Okay. So Ibarra owns a company called Elliott Turbines. Yeah. You're a big fan of industrials. Like you could be like an industrials analyst. Like you have like a lot of depth of knowledge there. All right, here we go, folks. This might break the internet. Only buy cars with manual transmissions. I'd actually be curious how many people know how to drive a stick shift in the chat. My guess is not many. Probably me and Mr. Clutch is my guess. Hold on. This one's a good one. Manal, you are on fire. If I could give like a gold star, it'd be like neck and neck with you and Cooper. What inspired you to make YouTube videos teaching people about the stock market? Your videos are very good. Well, thank you for that, Manal. I saw all the garbage that was out there, okay, and it was driving me absolutely to the brink of insanity. So you have people out there, I'm not going to name names, Graham Stephan as one example, public enemy number one. But there's a bunch of other people out there that are just blabbing about stocks. There's no fundamental analysis out there. It drives me insane. When someone says, I think this is going to happen, my next question is, why? Why? Like, there's one guy out there, he goes, buy half before earnings, buy half after. Why not 60% before and 40% after? Why not 38.3%? Like, you just come up with these stupid heuristics, and it drives me insane. So really what I saw was there's nobody with a Wall Street background like myself, 20 years Wall Street experience, that trains analysts and associates. Some of the people I'm training are like literally on this chat. Some I trained last week. Like I literally train the people that do the equity research on these companies. So you look on Cap IQ, some of the people that I train, they're doing that analysis. So it's like, why can't I put this into the hands of the average person? And then you make the decision, okay? I'm just the messenger, okay? I'm not telling you what to do. But at the end of the day, the stuff out there, it like makes my brain hurt how horrible it is, the garbage that's out there. People just pull up. Here's what people do. I've looked around at the channels. I'm like, what am I doing wrong? I've got 9.1K subs. So I look at some of the stuff that's out there. I'm like, dear God, what the hell is going on with the world? You basically have the equivalent, I've used this analogy before, of people on YouTube that are like, I like to carve pumpkins. And it's like, okay. And then they're like, you want me to do brain surgery on you? And you're like, whoa, bro, whoa. So it's just like such freaking garbage out there. It's just insane. Okay. It's insane. So that to me is like, it's borderline criminal. It's absolutely ridiculous. These people are so out of their depth. There's one guy who has a channel, wait for it. He goes, I started investing in stocks in 2017. This is my channel about investing in stocks. How does that qualify you to invest in stocks? What are we talking about here? That'd be like me saying, like, I started eating chocolate chip cookies in 2017. So I'm going to tell you about chocolate chip cookies. What? Can you even make a chocolate chip cookie, bro? This is how crazy the world has come now. So it's like, I'm like, I have to put the stuff out here. And when I ask people, I'm like, where do you come up with the value? Like, I don't know where these people come up with these values. Like, that's the thing. I could tell you to like 10 decimal places if you really want me to extend it out. But it's a discounted cash flow model. You're taking future cash flows, discounting them back to today. It's like the gold standard. It's everybody on Wall Street. So think about it like this. The market, which again, by the way, is like huge investment funds, portfolio managers, hedge funds, etc. They're doing what I'm doing. That's what the market is. So if everybody's following the exact same methodology that I'm doing, That's the methodology that's driving the market up, down, driving a price up, down. People aren't stupid. They see that the stocks are undervalued. I could go through a whole litany of stocks that I've covered. And I'm sorry I'm going on a diatribe. I call this a classic Ken tangent. So let me just look at some of the stocks, okay, that we've covered on the channel, okay, and what's happened to them, okay? So going back, Nvidia, okay? So no joke, all right, 3 months ago, I know this is going to sound like not true, all right? The thumbnail says buy at 100, okay? I said, yes, buy at 100 with two fists, okay? It freaking went to 180, okay? Celsius, all right? Buy at 28, yes, with two hands, okay? Now it's over 61. Going back to Microsoft, buy at 410, yes, buy as much as you can. So it's like CrowdStrike, that was another one. That one's over 100%. So it's like I do these videos, and I'm telling you exactly what Wall Street does. Like it's literally like a hedge fund saying, this is our internal research. But the crazy thing is, because the world is just mad, they're looking at these people. Dude, there's people out there that have hundreds of thousands of subscribers. So I'm like, oh, what are they doing? How do they value companies? And then I'm finding out it's like, this is an insane asylum. I'm the only sane person and everybody else is crazy out there. And I'm just like, this is nuts. Like the one guy, all right, no joke. He starts out, because I'm like trying to find all the things, like first 30 seconds, got to have the hook, all of that stuff. This guy starts out, he's got a Ferrari in his garage. He's like, hey guys, it's because of you that I was able to buy this Ferrari. You know the drill. Like, subscribe, tell your friends. And I'm like, what? And then he just starts going into like a whole bunch of rambling nonsense. Like, this is YouTube. Now, at some point, I have to believe in my heart of hearts that like sanity will be restored into the world and this channel will have a following. One day I'll be on CNBC and people will be like, where'd you come from? It's like, I've always been here, bro. I've always been here. And I've been teaching this stuff to people. It's a matter of like whether or not people will listen. The problem is people are like cats with laser pointers. So I'll have people that are like family members, okay? And like someone will be like, oh, did you see Ken's YouTube channel? Like, he's got a YouTube channel. What? And then I'll get a text. No joke. My cousin texted me. He's like, what do you think about XRP? I'm like, what? Are you serious? I was like, have you watched the channel? You could have bought Celsius, Microsoft, Amazon, like XRP. It's like freaking snake oil. What are you doing? It's like, why don't you go buy Beanie Babies, dude? Like, what are we talking about here? But again, like you folks are actually listening. Okay. You folks are listening. And it's like, okay, I think Ken might know what he's talking about. Maybe. All right. JP Morgan. 520 billion market cap. They're not hiring Graham Stephan. They're not hiring that psychopath on financial education. Seriously, go look at the guy's picture, okay? They're hiring this guy right here, okay? Right here, okay? I'm in Boston right now. This isn't the normal wood panel backing, all right? I'm literally doing this from a hotel room because I'm being hired by another client to teach their analysts. Like, there's a pattern here. But again, until I get like the following, that's why when people are like, dude, you should do a video on the stocks that you think are like really great, undervalued. I'm like, nobody would watch it because no one's searching for it because they don't know about it. If you look, real talk, okay? I talked about HHH, Howard Hughes Holdings earlier. If you go do a search, okay, I got vidIQ to see what I should do a video on. If you go search it, garbage, like totally in the trash. No one's searching for it. Why? Because nobody knows about it. So if I have 100,000 subscribers, guess what? I could just do the stocks that I want to do. I don't even have to waste my time with stuff I don't want to do. Like if you remember, if you attended the live stream last week, I came across one of the top performers in the S&P 500 last 20 years, Sterling Infrastructure, STRL. I would love to do a valuation on it. Love to. It's one of the top performers in the S&P 500, last 20 years. No one's searching for it. No one's ever heard of it. They build data centers, okay? So it's like, this is the thing that is like madness to me. So what I have to do is I have to find something that's trending and then do a video on it. But here's the funny thing. I'll do that video. Like a few weeks ago, I did a video on hymns. Okay. This to me was like, what the hell's going on in the world? I do a video on hymns and it went up like 25% in like a week. And I'm like, hymns is overvalued. I got a value of like $38. Dude, go back to the chat. Okay. People are like, you are an idiot. You don't know what you're talking about. Kill yourself. Da da da. I'm like, what the hell is going on, people? These are numbers. Take a chill pill. I'm doing math. I have no emotion towards this. Now, truth be told, I don't see what the competitive advantage is with hymns. What is it? They sell the same product that you could buy from other providers who also sell it online and deliver it to your door, and you get access to a concierge. There's no difference. Like, what am I missing here? And then people, like all the people, the hymns people are like the super micro people. That's another group of people that should be thrown off of a cliff. Okay. They don't understand math. Okay. They don't understand financials. Like you have to go look at that chat. I had to delete the one guy's comment. It was like so vile. I was like, oh my gosh, dude, like really? You want me to do what? It's like bananas. It's absolutely bananas. But again, it's like, imagine like a 2-year-old, okay? A little 2-year-old came up to you and like, I hate you. What are you going to do? Be like, I hate you. They're a 2-year-old. They don't know any better. So that's kind of how I treat this insanity. It's like, at some point, I'll have 100,000 subscribers, and then people will be like, I never saw this channel. Where have you been? And it's like, bro, I've been here. Where have you been? That's why I love when I get people who are like coming across the channel. They're like, hey, I just subscribed. Like, there's nothing like this out there. I'm like, amen and hallelujah. I know there's nothing like this out there. Sorry, I couldn't help myself, guys. I just had to go off. No. Now the chat's getting very funny. Oh man, dude, Proud, you missed UNH before. You're gonna have to watch the redo on the live stream. I was going nuts earlier on that one. But yeah, I covered it. I compared it to Amazon, and you would definitely buy Amazon. All right, here we go. Manow from the Netherlands. Hey, Ken, I have an interesting video idea for you that could blow up in views. Love it. The YouTube Leafy's here. Make a video giving advice about a stock. Hold on, I got to show it again. I would love to see you make a reaction video to his video. Okay. I'll have to check out the channel. You have to go way back on the channel. Graham Stephan was talking about like commercial real estate, and he's totally out of his depth. So he doesn't realize that they like securitize mortgages. So he was talking about office real estate and how like banks are going to go under. It's like, dude, what are you talking about, you dummy? So I did a reacts video to that, and it was like raw. Like I didn't practice it. I didn't watch it first. And it was just like, it was ridiculous. That was from like spring of last year. I did a reacts video to Graham Stephan. So you could go check that out. All right. I'm catching up on the chat after my diatribe. Interested to hear your take on the energy sector. So much growth potential, catching up to AI boom. Yeah. Nuclear. That's a good insight there. Nuclear is the answer. People think about like Chernobyl, 3 Mile Island, stuff like that, but nuclear is the most efficient and the safest. The problem is it takes a long time to build the reactors. You know, the cement has to be like 10 feet thick. So if they could figure out a more efficient way, that'll be a game changer. But yeah, nuclear is going to be the answer. We're not going to be able to build a power grid quickly enough. Like it's not going to happen. It's not feasible. All right. I know that you're focused on long-term strategies. Have you ever considered taking a percentage of your portfolio for quick trades and discussing trade strategies? Trading's kind of like gambling in a way. And I think there's just so much risk to it. Now, have I done trades before? Yes. So remember AMC, the whole like meme stock craze? That was one of them. Silver Lake ended up having debt, and they did a debt for equity swap, not too different than the US is trying to do with Intel. And what happened was AMC was at like $11, and I bought in at 11, and Silver Lake had like their debt was going to convert at $16. So I knew, I'm like, these guys are getting the hell out of here. They're running for the exits. So I got in at 11 and I dumped it at 16, just knowing that they would do that. But I mean, that's something that, you know, is like, it was literally like I did it at 9:30 and I was out by like 10:15. So I couldn't really do a video on that. Anything that's like good and smart like that. I know there's these other channels like, I only trade the first 15 minutes of the day and I buy penny stocks. It's like, good luck with that, dude. Have fun with that. That's not me. All right, let's see. Focus on Argentina. Yeah, I'm sticking to the US right now. Like, I've gone emerging markets before. I did Japan a few years ago. It's just a totally different structural differential. Yeah, dude. So energy infrastructure, like, you would absolutely crush. I will help you with that, promise. All right, I got to show this just for my own, you know, posterity. Dude, there was a guy on the live stream last week who put like one of the best comments ever. He talked about like Ted Williams' book on hitting, and he's like, "You're the Ted Williams of, you know, stocks." I was like, "Oh my gosh!" I literally took a screenshot of it. There we go. Thank you, my friend. Best stock analysis on YouTube. Yeah, dude. Like, all kidding aside, I could be doing better things than this. I should be at the Red Sox game right now with all the people that I'm training here in Boston, but I'm here for you. Like, not to guilt trip you. It's like, I want to help take what's in my brain and like just relay it to people. And not in this like weird, you know, like cloak and dagger way. Just very simply, like, does that make sense? Like, UNH versus Amazon. Why would you buy UNH when you could buy Amazon? You know, stuff like that. It's like why like God put me on earth. It's like, make this simple. And that's been also the feedback that people have given me, aside from, you know, also people tell me like, they're like, do a live stream. I'm like, why? And they're like, you have to do a live stream because your personality does not come out in the weekly YouTube videos. I was like, okay. All right. So just letting everybody know, Giovanni, this is a new stock idea, long Ken. All right. I haven't planned the IPO yet, but I'll let you guys know. Yeah, I'm not stopping. Like, I want to be on the other side of it, but the part of the success, it sounds like weird, but the struggle is the success. I could be in New York City working in investment banking right now as like a director, you know, probably making 7 figures, but I personally, honestly, see more upside to this than that. No question. No question. More people need to know this stuff, all kidding aside. Like, people just don't understand. They don't understand the basics of stock investing. Most people think stock investing is gambling. And that's because of knuckleheads like Jim Cramer on CNBC. Think about this, guys. All right. People call this dude and they're like, hey, Jim, what do you think about this? Now, you guys have done the same thing. If I don't know, I'll be like, I don't know. Let me look at Cap IQ. But what he does, he's like, yeah, not a fan. Yeah, it's going up. Yeah, it's this. Yeah, it's that. It's like, come on. Like, I want to go on CNBC and be like, bro, you don't know about this company. Period, full stop. Just like call him out. He'd be like, well, all right. I mean, I could pull it up. Hold on. Yeah, now you got multiple Ghost Stars, Manal. You're rocking it, bro. Yes, I will keep hammering away. Yeah, I'm gonna have a lot of good reels from this. There's no doubt. Yeah, David, can I be taught by Rutgers University? Yeah, take my classes. Like, I'm easy to find. I don't think they put me up as Ken Freeman CFA. I'm just little old Ken Freeman. Let's see. Oh, come on. Come on. Is that even really a decision? Although, if you were at NYU, you got demoter in. But I'm still on the upswing. I think he's on the downswing. Just saying. All right. That's my 2 cents. Any insight into your year-to-date portfolio so far? So like I'm very very open and honest about like what I own on the channel. I'll just rip some names. I don't have a lot of holdings, but I'll open them up. So hold on. That is so we could put it up on the screen. Naroon. So let me pull it up. I honestly don't know off the top of my head, but I'll rip some names. Because it just shows from when you bought the securities. All right, here we go. Bam. Coming at you. So Albertsons, that one's been a dog. I've been selling covered calls on that, but it's still undervalued. That would be like a classic Buffett play, okay? Where it's like there's no freaking catalyst, but you're buying it at a discount. So that one's a bit of a dog. Let's see, Amazon. I bought that during Liberation Day when all hell broke loose. So that's up 30%. MasterCard, I bought that a while ago. That's up 72%. Meta, I got into that during Liberation Day, the tariffs. That's 53.5%. Microsoft, I cited that earlier. Microsoft, I was in a little too early because I bought it at 412, but that's up 25%. Celsius, 175%. How you like me now? CrowdStrike, that was over 100%, but it's pulled back. That's 76%. And Joby has just been absolutely redonkulous, 231.46. Tesla's up big. I bought it last year. You have to buy right, you can't go wrong. Buy wrong, you can't go right. Tesla's up 114%, but I bought it last year when it pulled back. You guys are going to see very soon. Wink, wink. I'll get into the details with that. That's the stock for this week, by the way. But yeah. So, but yeah, there's some dogs in there. Albertsons has been a dog. Rivian is kind of sideways as well. But, you know, you're not buying stocks so that they like pop quickly. You know, like Celsius is a good example. It was a high of 99. It bottomed out at 22. Now, this is one of those things where it's like I'm not a technical person, meaning like I'm not a technician. I don't read stock charts, but there is something to it. You do need to recognize like if other people in the market do, then technically it is valid. So I saw like Celsius had bottomed out. I did the valuation. This is the other thing I like about YouTube. I have actual timestamps. So one of my coaches was like, dude, you need to do a video on like these successful picks and like go back through it. Like CrowdStrike being a good one, Celsius being a good one, Meta being a good one. And just show people like, hey, this is what I saw and this is where it's at now. So no joke, when I did the Celsius video, you could go back and look at it. Okay, it was a few months ago. It said buy at 28 on the thumbnail. And I said, yes. And people are like, dude, I lost my shirt on this, da, da, da. But if you go backwards and you look at the fundamentals, they were deteriorating. Kind of like United Health. Oh, it's a piece of dog crap. All right. So if the fundamentals are deteriorating, no good. Okay. But here's what happens. Stock bottoms out. Fundamentals get better. Okay. Sometimes what happens, and this is one of the things that Buffett tends to do, the fundamentals start turning the corner. Sometimes the stock takes more time to turn the corner than the actual fundamentals. But this is why the madness. There's people on YouTube, they're doing a video every day on Palantir. You can't do a video every day on Palantir. It only reports every 90 days. How could you do a video every day? Nothing's changed. Even the stuff with Intel. Oh, Trump likes lip. Trump hates lip. Trump doesn't have lips. It's like, what's going on here? It's so like when all this stuff happens, it's all white noise. There's nothing tangible that happened to the valuation. But the stock's like, until something happens that's going to impact cash flows, I don't care. Okay? It's irrelevant. So you can't do a video every day on Palantir. There's a literal channel on YouTube called Palantir Research. Every day. Multiple times a day. Videos on Palantir. What are you talking about? Like literally, I don't know what you could possibly talk about. Like what Alex Karp ate for breakfast? Like what could you possibly be producing on a daily basis? But the insane part, friends, there are people that will watch this crap and they'll say, oh, I want to see what the latest is. There's no numbers. If there's no numbers, who cares? What is the point? The only thing that drives value in stocks are numbers, cash flow, not what Trump said about Lip Bhutan or like converting this into that. Until the numbers are impacted, that's the only thing that matters, period. So I can't do a video on one stock every single day. It's impossible. Like, the numbers haven't changed. There's nothing to update. Okay, do you have any socials so I could send you this video I would like you to see to react to? Yes. So you could send it to my LinkedIn, all right, which is also Ken Freeman CFA. You could send it, I guess, to Instagram, but Instagram gets spammy. Or you could like put a comment in one of the videos. Like you could put a comment to this live and just say, this is the video I want you to react to. But probably LinkedIn would be like the easiest one because that's like pretty chill. Instagram, like it's tough because you don't know if they're bots. Instagram has like an insane amount of bots. I think there's more bots than actual humans on Instagram. I'm convinced. It's kind of like your gut microbiome. Crazy story, actual fact. We have more foreign cells, bacteria, in our body than actual cells that are ours. Look it up. Freaky. So it's like, are we the host or are they the host? True story. Here we go. About to break the internet. So how do you view Donald Trump and Elon Musk? So separately, Trump is definitely a no BS business person. I think the best thing about him is he's completely unpredictable. And I know people don't like that, but I think that's why, world leaders are like, this guy's crazy. We don't know what he could do. And someone told me, like, I was listening to a podcast, there's like a political science concept. It's called like the crazy man theory. And actually from a negotiating perspective, like the crazy man has the advantage because you don't know what he's going to do next. At least if somebody's perfectly rational, it's like, exactly how they're going to like act. So it's like, you don't know how this dude's going to react. It's like, he's like, yeah, everything's going well with the negotiations, and then frickin' bombs Iran. You're like, what the hell's going on with this dude? And then he's like he kicks Zelensky out of the Oval Office, and then he's meeting with him in the Vatican. It's like, you're like, what the heck is going on here? Like, you can't put a bead on this guy. Right when you think you've got him figured out, it's like, zoom, 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 zoom. He's all over the frickin' place. And I think that's the problem. Elon Musk seems to me to be like a very logical person. So at some point, even he is going to be like, whoa, this is crazy. Like, I can't logically make sense of this with my computer brain. So therefore, it's like, I knew that at some point when you have like two personalities like that, something's going to absolutely implode. And that's exactly what happened. But like, if you like carry it out further, I think like, depending on how you view things, either the best thing or the worst thing, again, depending on how you view things, was Donald Trump in the 2020 election. Because like 2024, dude, I'm telling you guys, I heard that dude sleeps like 4 or 5 hours a night. Okay. And he doesn't drink. So there's nothing like kind of slowing that brain down. Dude, that guy probably thought every waking moment, when I get back there, this is what I'm going to do. It's like, holy crap. And so now it's like the revenge tour. So it's like, this is like, I don't know if you guys watched wrestling when you were a kid. I did. It's like, this is like the perfect storyline. It's like, dude came back from the dead and now he's just on the revenge tour. That's what's going on. So it's just like, watch out. Okay. And then with Elon, he got caught in the crossfire. I think the Doge stuff was good in like theory, but I mean, dude, you're trying to make the government efficient. It's like, that's an oxymoron in and of itself. Everybody's got their like little paws, little dirty fingers in everywhere. And that's why they were against it. Everybody likes saving money until it's going to cost them something. And then it's like, whoa, this is bad move, dude, bad move. But again, I was talking about it today. So true story. All right. This is how fast the news cycle goes. I think all of these happened before COVID. 3 planes were shot out of the sky and everybody died. Now, you can go Google it. Okay? 3 planes shot out of the sky. Everybody died. Right now, you're like, Ken's crazy. That didn't happen. It did happen. It did. Go look it up. One was over Ukraine. One was over Iran. One was in the Sinai Desert. Everybody died. Nobody remembers it. Nobody cares. Everybody forgot about it. It's going to be the same thing with the Elon Musk stuff. So all these clowns that have like the stickers, I bought this car before Elon did, blah, blah, blah. People are going to look at that in 6 months. Like, what does that sticker mean? What is it? Like, that's how fast the news cycle goes. It's true. So, dude, I think Elon Musk, one of my buddies, he was like, dude, he's like, think about this. Like, Elon Musk could be like a super villain. I was like, explain. So he's like, he's got the satellites, then he's got the robots, and then you got all the self-driving stuff going on. Like, this sounds like Transformers, meets something else. It's like, it's true. It's crazy, So yeah, went on another tangent. Can't help myself. Yeah, here we go. Jim Cramer on United Health. It could come back. That's true. So could disco. And cassette players. They could. You never know. Good interview. Scott Bessemer and Stanley Drunken Miller 2019. Scott calls those like kind of orange swan event. That's a good one. Ha. Yeah, dude. Like someone unpredictable. Like you ever hear that? Like if you're a guy, all right, like what does your dad tell you or your uncle or your brother? Don't ever get in a fight with someone that has nothing to lose. There you go, friends. That's what's going on here. Like nothing to lose. Don't want to fight that person. Don't want to fight that person. This is a great question and a genuine, like legit concern. Do you think we can recover from our national debt? The answer is yes, but we're at a very, very important inflection point right now. Like we're very close to the point of no return. No country has ever survived long term with 2 times debt to GDP. We're at like 37 trillion of debt. GDP is like 30-ish. So like if you extend it out, if we don't grow the GDP fast enough, it's game over. Now, this is why Scott Bessent said reduce rates. And Trump's saying reduce rates, reduce rates, reduce rates. Now remember, this is kind of weird. Like we're charging ourselves the rate that's being set. Now again, I get the point, inflation, I understand that point. But wait for it. Wait for it. So let's understand this for a second, folks. Tariffs, okay? Tariffs, inflationary. Okay. Got it. Interest rates, okay? Let's think about that. Are interest rates inflationary? Let's let that hang in the air for a second. So lower interest rates, what lower interest rates do is it encourages investment, all right? So we have to think about that for a second, okay? If we're encouraging investment, we're stimulating the economy. That's going to cause the economy to grow, which could potentially impact inflation. Now, you have to remember, though, from a budgetary perspective, we're literally changing what we're charging ourselves in terms of the rate. So we control what we pay in interest. And right now, the interest is in the trillions of dollars. Just the interest is trillions of dollars. So we're going to have to, like, there's 2 ways that we could do this. Cut expenses. Everyone went frickin' bananas. Like, we're cutting, like, Sesame Street in like, the Middle East. And people are like, you can't do that. It's like, what the hell? So it's like, if we don't cut expenses, the only other option is to increase revenues. It's the only way that you can change your budget. You either make more money or you spend less. So it has to be the combination of the 2. All right. Here's the other thing. And this should be something that everybody should like let sink in. Think about your own personal self, okay, and wealth. You can only cut expenses to 0. But here's the thing. Technically, what you can make can go to infinity. All right? So if you're the type of person, okay, we've all been there, where you're trying to cut expenses. You're really trying to cut expenses to the bone. It's like, why don't you focus on making more money? Okay? There comes a point where it's like you're eating ramen noodles and cans of tuna. It's like, okay. But it's like there's only so low you can go. All right? But there's no limit to how much money you can make. So the logic here with everything that's going on, bringing manufacturing back to the United States of America, tariffs. What they're trying to do is change the formula so that we increase the revenue, okay? Because we can only cut the expenses so much, all right? One of the big expenses that we do have control over that we don't have to go to Congress and all of that stuff, interest, like the interest that we're paying. The problem is, like if you really look at it, let's go to Fred. Let's go to Fred. We saw Fred last week. Hang on. Fred, St. Louis. Yeah, buddy. All right, so let me share my screen, friends. Fred. Here's Fred. All right. Boom. Federal Reserve, economic data. If you want to see any economic data, this is the place to check out. So let's do U.S. debt. It was the last search. All right. Oh boy. All right. Oh, it's not as bad as I thought. I thought it was 37 trillion. It's only 36.2. But here's the rub, friends. Look right here. Okay. This is obviously COVID. It's hard to believe that Q1 2020 we were at 23. Now we're 13 higher. I gotta let that sink in for a second here. That's insane. Okay. So if you want to get an idea of how insane that is, what you want to do is go backwards. Okay. So for us to, let's see, 36 over 23, I want to look at the magnitude. 36 over 23, 56.5%. Holy bleep. Okay. So 1.565. So 23223 divided by 1.565. Boom. 14,838. So where were we at? 14,838, 14,838, 14, whoop, right here. So it took us from Q3 2011 to Q1 2020. All right. So 9 years. And then we did the same magnitude in 5 years. Okay. That's not sustainable. That is a major, major problem. But if you look historically, I mean, global financial crisis, we didn't go up like nearly the same magnitude as fast. But the problem is, I vividly remember this time frame. Okay. I remember I was in class, we're doing current events, and I say to the students, they're like, yeah, the government's trying to decide whether we should do 2 trillion or 3 trillion. And I was like, wait, what? I said, do you guys know how big a trillion is? And they're like, yeah, it's pretty big. I'm like, no. If you paid off, just to give you an idea, okay? I'm going to do the math real time right now. $1 trillion, okay? So if you paid off $1 trillion, trillion with a T, friends, $1 trillion, at a rate of $100,000 an hour, how long do you think it would take? Most people are like 2 years, 3 years. It actually comes out to like 2,048 years. Okay. So you'd be like going back to Jesus, like, what's up, bro? Nice sandals. Oh my gosh. That's $1 trillion. Dude, we've got $36 trillion. If you paid this off at a rate of 100,000 per hour, 1 trillion, it would take you 2,048 years. This is the problem. Okay. This is the problem. So I do want to touch upon this because this is actually very good. My friend Clutch here. So I bought $45,000 worth of Amazon when I retired earlier this year. Genius. Learn how to do a rollover. It's not hard. Yes. So this is something that I've talked about previously, not really on the channel because everybody goes like bananas over stocks. But once you get above the threshold, the income threshold cutoff is 150 is when the phase out starts, and it's fully phased out at 162. All you do is you take $7,000, dump it in a traditional IRA. Okay. Let it settle. Then you literally just convert it into a Roth IRA. That's it. It's called a backdoor conversion. Everybody that gets above 150 should just do it like over and over and over and over again. You could look it up. I'll look it up real time. Peter Thiel. Okay. Peter Thiel, he has more money in Roth IRAs than anybody on planet Earth. Roth IRA. All right. You're going to lose your minds. Be prepared. Put a helmet on. All right. Right now, put a helmet on. Brains are going to be everywhere. Wait for it. Peter Thiel made $5 billion in a Roth IRA. Let that sink in, friends. $5 billion. That's tax-free. $5 billion. Just Google Peter Thiel Roth IRA and be amazed. So I'll give you the long and short of it. Basically what happened is all these like early stage tech companies that he's invested in, he got warrants. So imagine like Palantir at like pennies on the dollar. He dumps all of that into his Roth IRA. Company's doing pretty well today, I believe. Okay. I'm worried about the independence of the Fed. I'm not. There's 12 governors. The head of the Federal Reserve has to get approved by Congress. Ironically, Donald Trump was the one who nominated Jerome Powell, and I guess he's having like buyer's remorse on that. You could argue it is a little sketch that like he decided to lower rates. It was the most important thing to do during the election, and now where it's like, let's go. He's not, but I'm not worried about the independence of the Fed. Jerome Powell's not going anywhere. He already said he's not. He said he'd fight it tooth and nail. Pratyush, welcome. Do you think Fannie Mae and Freddie Mac become public? Yes. If they do, it's easy. 2 to 3 times. What are your views? So if you go back, Bill Ackman actually mentioned this 15 years ago. So they were put into what's called conservatorship by the U.S. government. This was during the financial crisis to like protect them. Now they're already backed by the full faith and credit of the U.S. government, but it was really more so to just like have the market take a chill pill. So Bill Ackman actually bought Fannie Mae and Freddie Mac back then and said, there's literally not enough capital on planet Earth to privatize Fannie Mae and Freddie Mac. He's correct, by the way. So there's not enough capital out there to backstop all of these mortgages. Like there's literally no entity out there in the private sector that could do it. So his whole premise was like, it has to be the U.S. government, and it's only a matter of time. Well, he was about 15 years too early. It is, it's potential 2 to 3x. I mean, I had been in it a while ago, but again, it's like, it's just going sideways. It was kind of like United Health. It's a no-brainer. It's like, all right, see you in 3 years when it's sideways. It's one of those things. It could be 2 to 3x, but it all depends on if and when it IPOs. But it's look back at the Bill Ackman presentation. You'll get a pretty good understanding of like the math behind it. Manaus, I agree. If the Netherlands, Manaus from the Netherlands, by the way, friends. So yeah, you could be debt free. That being said though, like when I look at companies on the channel, I always talk about like the idea of net debt. So if you have cash more than debt, the debt doesn't matter. You could pay the whole thing off. The bigger problem is when your debt is significantly higher than your cash and you could like go bankrupt. That's the bigger problem. Boom. All right. If you had to decide on buying a stock without building a full model, what's your most logical framework? Ooh, good one. What inputs do you trust most for a quick, high conviction decision? So that's almost like a screening question. I'd have to find it. I might be able to find it real quick. So Warren Buffett's mentor was Benjamin Graham. And right before he died in 1976, screener rules. Let's see if I can find it. All right, here you go. This is gold right here. So this is Ben Graham. This is literally the guy that taught Warren Buffett. All right. So if you want to find like a quick rule of thumb, like where you just sift through as many stocks as possible, let me share it. And I see the questions in the chat. Just give me 1 sec. All right. So Ben Graham, okay, again, who was the guy that taught Warren Buffett everything that he knows. So he did an interview, simplest way to select bargain stocks. Okay. So PE ratio 7 to 10 or less. You could also do 2 times current AAA bond rates. That's how he came up with that number. And then an equity over asset ratio of 0.5 or more, which would be debt to equity less than 1. So basically, it's cheap and it doesn't have much leverage. Now, you got to be careful with this next one, net current asset value or net nets. Those are very, very rare. You basically take 100% of the cash, 75% of the accounts receivable, 50% of the inventory, and you subtract all the liabilities. It's very rare that you're going to find a net stock anymore nowadays. But P ratio 7 to 10 times, equity to asset 0.5 or more. That would be like a quick rule of thumb that's like time tested. But like, frankly, I wouldn't buy a stock if I didn't build a model on it. I just like, I couldn't wrap my head around it to do so. Okay. All right. So I'll get to the UNH point. You were a little late to the party. I covered UNH like in detail, but I'll explain. I just want to make sure I covered the other comments. All right. So I just answered that. I'll be shutting it down in a little bit. I got to get my beauty sleep. And I got to work on this week's YouTube video. True story. The work doesn't do itself. Okay. So I don't remember this was discussed last week. Any thoughts on private equity and crypto? Entering the 401ks, I think it's a win for everyone. I agree. The only thing with private equity, it has a longer time frame associated with it. So, you have to have patience with it. And then like the typical like YouTube stock person that like wants to get a 1,000,000% return overnight, like the market's pretty efficient. That's not realistic. But I would say it's a positive. Crypto, like basically the answer is Bitcoin, Ethereum, Solana, and that's because each of those have like the technology behind them is relevant. So like if you ask me like what cryptos make the most sense, I would say those. But yeah, private equity, like it just has like a 5 to 7 year time frame on it, and like most people are not willing to hold on for that long. Bill has a 2-hour breakdown presentation on how he brings Fannie and Freddie back to a privatized company. Super interesting, but obviously quite a slog to watch. Yes, that is the thing. Pratyush, you have to watch that. It's very, very good. All right, so UNH, we went bananas on this earlier. Why do you think UNH will go sideways for 3+ years? Just curious. So I covered this earlier. There was a Barron's article that I went through. It's due to Medicare Advantage and the changes that are occurring with Medicare Advantage. It's seniors, it's very low margin, and there's obviously a huge demographic shift for people like baby boomers that are, in Medicare Advantage specifically. So they have to kind of defend their position. There's not much stickiness. I'm also talked about this. But the Barron's article that I covered earlier, if you have a Wall Street Journal subscription, you can get Barron's. But if you don't, you can't get the article. So that's why I shared it earlier. So just take a look at that. But net, like it's a very low margin business, health insurance. It's just, it really is like a dog business. So it's like, is it undervalued? Yes. But again, it's been undervalued, quote unquote, for like 6 months. And the market's very efficient. It's not perfectly efficient, but it's very efficient. So if it was like, oh, whoops, we messed up, like it would go up by now. But it's a very, very, very tough business. Very tough business. All right, so Karen said, don't forget the pro rata rule, by the way, for conversions. Got to take the IRA money, move to a 401k before the conversion. So when we're talking about conversions, the typical one is for a traditional to a Roth. You have to be very careful with a 401k because remember, like that's being invested bi-weekly. So then if you do a conversion from a 401k, like a traditional to a Roth, or from a 401k to a Roth IRA, you're going to get eviscerated in taxes, like actually like blown out of the frickin' water. I'm mulling my mind over the question of Apple 2010, 2015. Here, let's show it in the stream. What is Apple from 2010 and 2025 to buy stock from? But I can't think of anyone. I will keep my eyes open. Honestly, Manow, like just go look at this channel. I'm not tooting my own horn, but like Amazon is like insane. The key is you have to buy it at the right price. So like right now, I haven't updated the model. Like Meta and Nvidia, sorry everybody, overvalued. Like you can't justify the current prices that they're at. They're probably a hold, okay, but you still have decent value. Like Amazon already ran up. Alphabet, that's not too crazy. But what you have to do is you have to strike when the iron's hot. So like, no joke, I did not have a position in Meta until Liberation Day. Tariffs, okay? I did a valuation on it, the whole 9 yards. I did the video. I said it's a hold, it's never cheap, it's never cheap, it's never cheap. And then all the craziness was happening with the tariffs. I was just looking at stocks. I was like, holy crap. Meta's below 500. I popped open my model. I was like, oh my gosh, the bear case that I had, which was the worst case scenario, was 560. It was at a 20% discount on my bear case at one point. I was like, this is madness. So I just backed up the truck on that. People don't realize it. Right now, you're looking at Amazon. You're like, oh, Amazon 230. Dude, Amazon got to like 161.49. I think that was the 52-week low. I was like, what? Yeah, Amazon. Okay, I'm sorry, not 161.49, 161.38 during the tariff madness. Now, again, you think to yourself, like, wait a second, tariffs, Amazon, like, if any company is going to have that pass through, it's Amazon. We're just going to buy the cheapest one. Who cares? Like, who's charging what? Whatever's the cheapest, like, when it's a commoditized product. So, yes, Amazon won. So, you could have bought Amazon, all right, for 161.38 on April, wait for it. It was actually after the tariffs. So that one went down to Chinatown April 21st. So you could have still bought it. Like the tariff stuff happened the 4th or the 5th. You could have still bought it like weeks later. And then it's just absolutely gone freaking parabolic from there. So that's the thing that, you just got to be mindful of. So really the proper way, okay, the real way that you guys want to focus on investing in stocks, find great companies, check. I think we know who those companies are. Amazon, Microsoft, Google, blah, blah, blah. Obviously the Mag 7. And then there's other ones as well, okay, Home Depot. Then you do a value. When it goes below that value, 20%, you buy. That's it. That's the secret. You buy it at a discount. Very simple, okay? Don't overthink it. Yeah, invest in lawnmower stocks. So Manow says something funny where there's actual statistical rationale with this. So invest in lawnmower stocks in the winter, sell your stocks in the summer. So interestingly enough, there's academic studies that have done this where you look at sell in May and go away. It's like a saying. And the idea is from May until Labor Day, everybody's on vacation. All right. I know that's definitely the case in Europe because I worked at Deutsche Bank and like August, it was like a ghost town. Like no one picked up the phone in August. But oddly enough, like Americans, we never stop working. We don't go on vacations. So interestingly enough, I've been working for different banks all summer and everybody's like, when's summer happening? And it's like, there's like 2 weeks left. So what's kind of interesting is that hasn't held for this summer because the markets just continue to go up. But historically, if you actually sold like Memorial Day and bought back Labor Day, you'd actually beat the market otherwise than if you just stayed in the whole time. But that hasn't held true recently. Okay, so hold on. We have a clarification right here, friends. I want to clarify, before you do a backdoor Roth conversion, you want to make sure you don't have to pay other pre-tax scholars in a traditional IRA, or you will be taxed on it. Correct. You will definitely be taxed on what you put in a traditional and convert to a Roth. Here's the point, though. What you don't want to do is invest in the traditional, okay? You want to just put cash in the traditional, let it sit there and settle, and then put that in the Roth, okay? Don't invest it. That's why when people say, oh, should I do a traditional 401k and then convert over to a Roth? The answer is no. You will get absolutely destroyed in taxes. Because what happens is you're investing bi-weekly, every paycheck. So is your employer. So at the end of the year, you have an employer match, 23,500 is the limit, but then you add the employer match to it, you're probably talking about $30,000. And then if it grows on top of it, that's just the contribution side. If it grows on top of it, that could be 35, 40 grand. Now you're like, oh, I'm going to take that and throw that into a Roth. Bro, that's going to be like $12,000 tax bill, and you can't touch that money. So that's coming out of your pocket. Now, here's the interesting thing. So it's like, well, why not with the traditional Roth? Good question. Right now, the current standard deduction, single, $14,600. So guess what? That $7,000 just knocks down that $14,600. You still have $7,600 left. So Manaus is definitely lost because we're not talking Netherlands now. We're talking about U.S. taxes. And again, I'm not a tax professional. Consult with your accountant, blah, blah, blah. But I'm just telling you that is that's the reality of it. But you're not going to be shielded. There's no standard deduction that's going to cover, that huge, massive amount from a 401k. How do you view mixed reality? So I don't view it. I live it. So I guess mixed reality, like there's different like universes and stuff like that. What's that one? This was a really good show. Oh, hold on. I'll pull it up. It's driving me nuts. I don't know why I'm not remembering it. Hold on. Wait for it. It was about like if World War II was actually not won by the Americans. Hold on, I gotta find this book. It's gonna drive me crazy. The Man in the High Castle. Yes, The Man in the High Castle. Dude, mixed reality. Watch that. Freaky. Basically, it was like there's different universes, and like in different universes, like we won the war, we lost the war, stuff like that. It's freaking trippy. But no, I think like we're all living in the same reality. YouTube algorithm hates me, loves garbage. That's the reality. For now. Besides Ackman, who are your favorite hedge fund managers? Okay, I gotta show it on the stream, y'all. I like what Ray Dalio says from like a philosophical perspective. He's really on top of debt and debt cycles. So if you're interested in debt, I would definitely recommend listening to Ray Dalio. I'm a huge fan. Stanley Druckenmiller, Duquesne. He's really, really good. Bill Ackman, obviously. Also, I know Bill Ackman and Carl Icahn have had at it a bunch of times, but Carl Icahn, he's a savage. He's like multi-billionaire, knows what he's talking about. The guys that I don't relate to as much are like David Tepper, Stevie Cohen, because those guys are more like trading oriented. Paul Tudor Jones, also more trading oriented. So can't really like wrap my brain around those guys because I'm not really like a trader. It does work like trend following. You could look at the turtles. You could go look that up. That there is validity to that. But when you talk about like buying undervalued stocks, I'm really focused on, Warren Buffett and Charlie Munger as the GOATs. Actually, though, I will tell you, Manish Pabrai, all right, he wrote The Dondo Investor. He's really good. And then who's the other guy who's also a Buffett disciple? He has Aquamarine Investment Management. Hang on. It's Guy something. What the hell's the guy's name? That's going to drive me crazy. And he wrote a really good book. Come on. Buffett Partnership. His name's Guy something. What the hell is his name? Guy Spier. And he wrote a very good book, Guy, Spier. So Guy Spier, Manish Pabrai, those are both like Buffett disciples. There's also guys in the insurance space like Prem Watsa. He's in the insurance space. He's like another Buffett disciple. Obviously Charlie Munger. Like read the old Buffett partnership letters. Like seriously. The Buffett partnership letters are like gold. Dude, Giovanni, Man in the High Castle. Dude, really good one. That's one of those ones that's a problem though, because you'll watch an episode, you're like, I gotta go to bed, and then it's like 3 o'clock in the morning. You're like, oh my gosh, like you can't stop watching it. So save that for a weekend. But yeah, that's fire. Oh, sorry, David. I went on a tangent. What I mean is the metaverse. Whoops. So yeah, the metaverse, it's one of those things, AR, VR, it's going to happen. Meta's going to have the first mover advantage with it. I don't think it's a matter of belief. I mean, it's a money loser, but no one's willing to lose the money on it. It was kind of like my premise with like electric vehicles. I'm like, the traditional automakers are going to let all these other companies lose money on it. And then when like people figure out the battery technology and stuff, they're just going to take advantage of it. You know, you have to remember, it goes back to the humanoid robot things. Why would Tesla dominate there? Because they have the capabilities to produce them. Like, if we all said, hey guys, I'm up in Boston, come meet me. Let's go make a humanoid robot. And we put our heads together and we make a freaking amazing humanoid robot. We don't have the capability to scale that and make thousands of them or millions of them. Tesla can. And it doesn't have to be the best humanoid robot. It just has to be decent. That's the thing. Lulu is the Chinese Warren Buffett. Watch his Columbia talk. Yes, Guy Spire. All right, so I'll pop that in for you guys. I'll have to check him out, the Chinese Warren Buffett. And then Guy Spire is Aquamarine. I don't understand this one. Regal IB Pigeon. Regal IB. You're going to have to clarify that. I don't understand that, dude. All right, so hold on. I recommend the book The Summons from John Grisham, my favorite thriller of all time. You will love it. All right, so I'll read that. You read Man in the High Castle. And then Giovanni and I will see if you like Man in the High Castle. I know, I mean, Giovanni likes it. It's fire. That book will just like crazy. I'm gonna write it down, The Summons. All right, friends. I'm gonna wrap because I gotta wake up early. I still gotta finish the freaking YouTube video. So obviously that gives you guys the reason to show up on Friday morning at 6 a.m. But comment on this for other ideas. Like, this will be live soon enough. These are freaking long videos, which I don't mind. I'm here for you. I'm a man of the people. But if you have ideas of like, hey, Ken, for the next live stream, could you talk about blah, blah, blah? And my one friend, like, we covered United Health, like, first thing. That was like the very first thing. That's why I didn't go back to it. But you'll see it at the front of the live stream. But any ideas that you guys have, you know, check this out, check that out. What do you think about this? What do you think about that? I could end up, you know, kind of doing a little bit of work before the next live stream start. And then we could just walk through whatever you guys want. But it's kind of like open forum, free form. So yes, Manaw, Man in the High Castle. It's by Philip K. Dick. There you go. All right, friends, I'm going to cut it here. This was awesome. The chat was on fire. Netherlands gets the gold star. So great job, Manaw. But yeah, guys, you know anybody else that you think would be a good contributor or have good questions, have them come to the live stream. I'm going to do them every Monday, 7 p.m. Eastern Standard Time. But really appreciate it, guys. I'm going to keep doing this. We're not going to stop. We're going to keep the movement going. And then eventually people will be like fighting to get into the live stream. And then I could actually do videos on the channel because we'll have like 100,000 subscribers. I'll actually be able to look at stocks that nobody covers because I won't need an algorithm. I'll be the algorithm. But we have to get there first. We're not there yet. All right, guys. Have a great rest of your week. Be on the lookout. 6 a.m. Friday morning, the new video. All right. It rhymes with Hesla. See you later, bro. Hey.